Let's just hopefully YouTube kicks in and we're good to go. Just give me like 2 seconds. Okay, everybody back? Zoom, we good? YouTube? Okay, guys. Whew. I hate technology. Okay, but I had a power outage today, and then the power finally got restored, and I think it screwed up everything here. So welcome, guys. How's everybody doing? Okay, so let's just get. I just want to pin the Telegram group, and we'll get started. Okay. Welcome, guys. Okay, I think we're back in business, everyone. Sorry for the technological delay here, but I think we're good to go. Okay, how's everybody doing? Let's get into this. So I don't want to waste too much more time because we've already lost like 20 minutes. Okay, so guys, welcome to Stock Snipers Trading. My name is Ron. My partner is Dave. Thanks for joining, guys. It's 9:22 p.m. Eastern. It's a start of the week, new month, new everything. A lot of things happened today in the markets. Today is Monday, June the 3rd. What we're going to do is we're going to do a higher time frame analysis, how we started last week. We're going to go higher time frames. We're going to do daily, maybe look for some 4-hour setups, and then we'll review them this week. We'll talk about all the news today. We'll go through the entire week's news on Forex Factory, and we'll go through all of the news in earnings whispers and just a lot of things that are going on in the markets today. So how is everybody doing? How's everyone's day? Did you guys see some things happening in the markets? Did any of you guys see that US30 Dow Jones got halted for a couple minutes? Did you guys see that? There was a glitch where Berkshire Hathaway would drop 99.9% down to $100 like a share, and then it kind of halted the entire circuit breaker in the stock markets. Did anybody see that or hear about that? That happened with Warren Buffett's security, the Berkshire Hathaway, and a few other securities. I'm not sure if maybe you guys caught it. Guys, can anyone hear me, or am I talking to myself again here? I don't want to just be talking to a computer here. Anybody here listening? Anybody on YouTube? Can you guys hear me? Anybody in Zoom? Or did the audio go out again? Yeah? Okay. Sean, okay, good. I think I'm not sure if YouTube is working, but I don't know. Okay, but anyways, we're gonna get into it, guys. As long as I know I got Zoom here, they can hear me, and hopefully YouTube can kick in any moment. But what we'll do is we'll get started with gold. Okay, a higher time frame analysis. We'll do gold today. We'll do US30 and NASDAQ. But before we get into any of that, let's do Forex Factory. There is a few things happening this week in the markets. Okay, so Forex Factory. Okay, so Monday over here. Guys, I'm a little flustered, okay? So, in case you guys can't tell, I'm a little flustered. There's so much going on right now, and I have no idea if you guys, audio-wise, can hear me on YouTube. I'm on different screens. Frankie has no live feed, just logo. Yeah, that's because YouTube is using my camera. So there is no camera on Zoom, but you guys can hear me. That's the main thing. Um, does that matter, guys, if it's just the logo? I'm still here with you guys. But the camera is used on YouTube. Okay. Holy shit, this is gonna be a rough call. But let's get started with Monday, June 3rd over here. Okay, so I'm just gonna do my thing. Okay, so I'm gonna not pay attention too much to what's going on in the chat. As long as you guys can hear me, let me do my thing, and then we'll get through this call. Because if not, I'm just going to be all over the place here, looking to see what you guys are saying, and just throws me off. Okay, so on Monday, we went through live London over here. We had London news. We had this morning Wall Street 9:45 final manufacturing PMI news come out. We had ISM manufacturing PMI. So today is over. So what we're going to do is we're going to start to prepare for tomorrow and the rest of the week. So we have Tuesday coming up. Right before London market opens up, there is some Swiss news coming through, CPI month over month. So if you are trading the Swiss franc, pay attention to this folder right here. It is red, high impact for a reason. Continuing to move through Europe, we have some Spanish unemployment. We got some German unemployment news coming out. That might help shape up early on how the pound is going to trade, the euro is going to trade this week. We got some unemployment news. But more importantly over here in the North American session over here, 10 a.m. Eastern. So you guys all know Wall Street opens up at 9:30 a.m. 30 minutes later, we have a USD red folder. It's JOLTS job openings. Okay, so some of you guys are unfamiliar with this. Some of you guys are familiar with this. What is this? It's previous 8.49 million. The forecast is lower, 8.37 million. But what does all this mean? So just click on the folder right here. It comes from the Bureau of Labor Statistics. It measures a number of job openings during the reported month, excluding the farming industry. So actual greater than forecast is good for the US dollar. It's released monthly. The next release will be July 2nd. And some notes, it's released late but can impact the market because job openings are a leading indicator of overall employment. And then what else do we have this week? Friday, we've got first Friday of the month will be NFP. So this might give us a little guidance forward as to how NFP might trade or what to expect. If you guys want to know what JOLTS stands for, it's Job Openings and Labor Turnover Survey. That's what JOLTS is, okay? We can see the previous over here, the actual, what to look for. So tomorrow, be careful. If you're trading in here at 10 a.m., make sure you are aware of this folder. If you are in any trades through Wall Street and you're going into here, expect a little bit of volatility, okay? And if you're not in a trade, maybe wait for after the news to look for maybe a trade. Risk management, always, please be prepared for something in here, okay? And then continuing to move forward here throughout the day, not much going on. And then we move into the end of the day, Wall Street close. We got then our New Zealand, Australian session. Then we move into Tokyo. Okay, so tomorrow, main things is just if you're going to trade London, there is some unemployment numbers coming through Germany and Spain, and then our big jolts at 10 a.m. Then we move into midweek Wednesday. We've got a lot of European news coming out. So you can see a lot of European folders. They're all of low impact, so they're yellow folders. We got some French industrial production, Spanish services, Italian services, French final services, German final services. So a lot of things going on. British final services over here. So if you are trading anything to do in London with the euro, with the pound, if you're trading DAX, anything, just be aware, okay? We don't see anything high impact, but still when we have a lot of folders lined up, it could cause a little bit of volatility, okay? And then we move into the North American session Wednesday, 8:15 a.m. So this is 5 minutes before COMEX market opens up, and I know a lot of you guys are trading gold at this time. Please be aware of this folder right here. It's ADP non-farm employment change. We have our previous numbers, 192,000. They're forecasting for 173,000. What exactly is this? Click on the folder and it will give you a little bit of information about it. So ADP is Automatic Data Processing Inc. What it measures is estimated change in the number of employed people during the previous month, excluding the farming industry and government. Actual greater than forecast is good for the currency. It's released monthly, usually on the first Wednesday after the month ends. Notes, this data provides an early look at unemployment growth, usually 2 days ahead of the government released employment data that is designed to mimic. And why do we care? Why do traders care? Why do investors care? Job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. So that's pay attention to this. They're seeing a little bit of a decrease. Look at from if we look at the previous months, 208,000. Actually, they forecasted a little lower. It came at 179, but it was actually greater than 192,000. This was last month. So there's your 192,000 from May 1st of 2024, last month, and there it is. So there's our previous 192,000. And what are they forecasting now? A decrease, again, 173,000. So we'll see what the actual number is tomorrow. And make note, it's 5 minutes right before COMEX, and this will affect the US dollar. Therefore, if you are trading gold around that time, then be ready for also 8:20 a.m. Eastern. That's COMEX market open. Then we move into 8:30 and then Wall Street. And then we've got some Canadian news coming out of here. We've got the overnight rate. This is interesting at 9:45. So I will be following this. Bank of Canada rate statement, and then our overnight rate. You can see that they're forecasting a decrease in the overnight rate by a quarter percent to from 5 to 4.75%. So we'll see tomorrow what Canada does with the overnight rate. Will they decrease it? Will they keep it at 5%? So we'll see tomorrow what actually is happening. Sorry, on Wednesday, what is happening here. And then we continue to move into then Wall Street, and then 10 a.m. we've got some ISM manufacturing services PMI coming out of the US. We have a Bank of Canada press conference at 10:30, and then crude oil inventories. If you do trade crude, crude dropped down to a nice level of demand, and Biden started to fill up the reserves, as we were saying the last couple of weeks. It might be a good time to start filling up reserves in the US under $80, $78 a barrel. So we were talking about that the last couple of weeks. And if you do follow crude oil, maybe you are paying attention to why they are filling up the reserves at this price and things like that. Okay. And then we also have a 30-year bond auction coming out of Japan on Wednesday night. And then Thursday, let's move into Thursday. Thursday is a busy day in the markets. Throughout London, you have all of your London news. So you got a lot going on in London, pre-London. You got some German news, Italian news, French news, British news, lots coming out of London. Then we move again into our North American session right over here at 8:15 a.m. You got some European news coming out, red folders, main refinancing rate. They're seeing a decrease in the refinancing rate over here. So previous was 4.5%. In Europe, we're seeing maybe a 0.25% decrease over here in the refinancing rate. And then we get a monetary policy statement coming out of Europe. And then we get into our 8:30 North American session, and then we start to get our every single Thursday, our weekly unemployment claims over here. So they're seeing from last week 219,000. They're forecasting no change, exactly the same, 219,000. So we'll see what the actual number is here. And remember, if it's a lower number for unemployment claims, for example, if this is 210,000, it's 9,000 less than their forecast. That means that's good for the US dollar. That's 9,000 less individuals applying for unemployment and more individuals working. Okay, so if you see a number that's lower than 219 and it's green, that's why it's green, because less individuals are applying for unemployment and more are working week over week. And then we continue to move into Thursday. Right at 8:30 we move into Wall Street, and then the afternoon goes into the Asian session, and then Friday. So this is what the market is waiting for this week, is all over here in the US. It's the NFP, non-farm payroll. So you can see it's pretty light folders in London on Friday morning, but this is what the market will be waiting for. Okay, and then we also have FOMC coming up as well. So let's pay attention to everything that's happening this week. It's a new month. It's a new week. We've got a lot going on. There's NFP, and then we have FOMC with Powell next week. So if you are trading or if you are not trading, make sure you're just paying attention to what is going on in the overall markets, and that might make you trade better with proper risk management, knowing that there's a lot going on, a lot of developments going into the summer. And this was the one that Fed Chairman Powell was talking about, the FOMC in June, that's the one that they would possibly see some rate cuts. So let's see what they do next week. But maybe this unemployment data coming out on Friday might affect the FOMC. So let's see what they're projecting here. So we do have our three Canadian folders over here: our unemployment change, unemployment rate, and our capacity utilization rate. That's in Canada, but more so we're more focused on what's going on in the U.S. So right here we've got our red folder at 8:30 a.m. average hourly earnings month over month. From last month, 0.2%, we're seeing we're forecasting a 0.1% increase in average hourly earnings to 0.3. Maybe earnings are going up a tad to try and keep up with inflation. Employers are maybe forced to give out a raise, things like that. We're seeing that all over fast food restaurants, like in California, McDonald's is going up, which is good for employees, obviously, the people working. It's great to have a raise, but overall, that's going to make our Big Macs cost a little bit more money and things like that. So, but what we see here is what we do as traders is we dissect folders, folder by folder, and we start to put the pieces of the puzzle together. So whether our average earnings are going up, or they're going down, or they're just staying steady, the market reacts to all of this news. And so we'll see. But what we're seeing is a forecast of an increase in hourly earnings, non-farm employment change. So we're seeing an increase. So the previous was 175,000. They're forecasting an increase in the non-farm employment change to 189,000. That's an increase of 14,000. What does this mean? Click on the folder and you'll get a quick little summary of what it measures. It's a change in the number of employed people during the previous month, excluding the farming industry. So let me just repeat that one more time. Change in the number of employed people during the previous month, excluding farming industry. Actual greater than forecast is good for the US dollar. It's released monthly. Some notes about it. This is vital economic data released shortly after the month ends. The combination of importance and earliness makes for a hefty market impact, so prepare for volatility. Why do traders or investors care about this folder? Job creation is an important leading indicator of consumer spending, which accounts for a majority of overall economic activity. Okay, and then there is some related articles you can read on here. If you want to see or kind of backtest what happened last month, the last time we had non-farm payroll was NFP was May 3rd of 2024. We had 315,000 from the previous NFP. You can see the forecast was really a lot lower than the previous, to 238,000. And then look at the actual number that came out. It was a red 175,000. So let's see now what they're doing. So you can see from last month, the red 175,000, that was the actual from last month. That's why it's over here, previous 175,000. That's where they got that. That's where they get this 175K from. I had a question the other day, said, Ron, where are they getting these numbers from? So you can see this came from the previous month, the actual number from previous. That's why it's right over here, 175. So now what are they forecasting for this month? They're forecasting an increase up to 189,000. So we'll see if this is maybe 200,000. It will be green. That's good. It's above forecast. It's above the previous month. But if it comes out like let's say for example, below 189, it comes to 180. It's a decrease. It will be red, but not less than the last month. But if we see something come out like dramatic, like 150,000, and it's red, then you will see that it's below their forecast and it's below last month. So then that's where you get some volatility in the markets, okay? So we will be looking at that this Friday. This is a critical one that I really pay attention to. I pay attention to everything, but I put more significance on unemployment rate. This is a really important one. So we'll see what the unemployment rate, the actual rate, is doing. From previous, it was 3.9%. You can see they're forecasting no change in the unemployment rate. They're keeping it steady, their forecast, at 3.9%. We will see the actual number. Is it going to be 3.8? Will it be 4.0? Will it be 3.9? We'll see the actual number. Okay, so what does unemployment measure? It's a percentage of the total workforce that is unemployed and actively seeking employment during the previous month. Okay, so actual less than forecast is good for the currency. So we want to see the unemployment rate down. We want to see it 3.8, 3.7, get it lower. That's good for the overall economy, good for the US dollar. It's released monthly. Why do traders care? Although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of the overall economic health because consumer spending is highly correlated with labor market conditions. Unemployment is also a major consideration for those steering the country's monetary policy, FOMC, Powell, and all of the chairpersons at FOMC. Okay, so they follow what's going on in the overall labor markets. So we need to follow it as well, okay? So we will see this Friday. So you might see Tuesday, Wednesday, Thursday, markets trading a little bit sideways, ranging a little bit. Yes, there will be some ups and downs and things like that. But overall, the market is waiting for this data to come out Friday morning because what it leads into real quickly, if I just look into next week, Wednesday next week, June 12, 2 p.m. Here's your federal funds rate. They haven't released it yet. Here is your FOMC economic projections, and then your FOMC statement. And then 2:30, this is where Powell comes out at 2:30, and then gives the FOMC press conference and answers a question. So here you'll see, similar to Bank of Canada, you'll see the previous rate, their forecast. We'll see the actual number. So this is our Friday NFP could determine what they do with these rates next Wednesday at 2 p.m., the actual FOMC. So make note of this date, guys, June 12 next week. It's going to be pretty big because Powell has been hinting that the first FOMC in June would see maybe a possible rate cut. So we'll see if it's 0.25%. Maybe we'll see what Canada does this week, and then we'll see what US does following. Okay, so are we all good, everybody, on just Forex Factory this week? Which days to pay attention to, which times to pay attention to, how to manage your risk, guys. So always when you're trading into a red folder, please understand the significance of it. If you prepare yourself ahead of time, then maybe you don't need to over leverage. Maybe if you're in a trade, maybe you start to reduce the trade, whether you're in profit or in drawdown, and just be aware, okay? Be aware of what's to come, okay? So that's why I like to do this. Spend some time early in the week to do this. Oh, you guys cannot see my screen? Oh, no. Okay. 1 second, guys. Zoom, can you guys see my screen now? It's on Forex Factory? Yeah. Okay, guys. Sorry. I'm using some other screens here and didn't see which one I'm on. Okay, well, that's what I was just talking about, was just Forex Factory over here. Okay, there we go. We got things all caught. So let's now move over to earnings whispers. Okay, so earnings whispers. Just if I look at the calendar this week, I always like to look at which days have more earnings than others. So Monday was pretty light today. You can see that there was only 3 before, 4 after. Tuesday, tomorrow, we've got 7 corporations reporting pre-market and 8 after the market. Wednesday, midweek, before New York open, we've got 16 corporations reporting and 12 after the close. And Thursday, we've got 15 reporting pre-market, 16 after hours. And then Friday is a pretty light day in the markets for reporting earnings-wise. We only have 2 pre-market and then 0 Friday evening, okay? And last week we had some pretty big earnings, guys. So do you guys remember when US30 took a dump with CRM, Salesforce, and then the following day, who picked up the bottom was Costco? So did you guys pay attention to any of that? Like how they plan these moves. Start to learn these things. So like CRM, Salesforce, had a very disappointing earnings, had a big sell-off. Their own security-wise, they were down 20%, which caused the Dow to drop about 400, 500 points. And then the next day, kind of traded sideways, and then Costco kind of picked it right back up, where it came right into a nice higher time frame area of demand. And Costco had really good earnings, and they're hitting all-time highs as well as a corporation, doing really well. And Costco kind of started that rally off the bottom. Okay, so you can see what if you follow earnings, it can help with everything you're doing trading wise or investment wise. So if you know that volume is coming into higher time frame areas of supply or demand, and you know which corporations have earnings on specific days, which are the bigger ones that are weighted heavy in the certain index that you trade, then maybe you can start to now put a little bit more pieces of the puzzle together and start to understand that maybe these were some type of engineered moves on the days when they've got certain securities reporting, and then all of a sudden one security has a really bad outlook and it drops right into a nice higher time frame area of demand. RSI on higher time frames are oversold, and then you got a good company having exceeding and beating their earnings, and then right into that area of demand where short sellers can kind of cover their position and allow new volume of buyers to jump right back in the market. So did anybody catch that last week? Was anyone aware of Costco's earnings? Or I like to keep you guys informed, but this is a little bit of your work too, guys. Get in the habit of doing this. Overall, it will give you a better understanding of the markets. Whether you trade Costco or not, just start to learn, because maybe you're going to trade a certain index that security trades in. So it's good to know, guys. It's good to know. Okay, so this morning we had a couple already report. Let's look into the after hours and then move into Tuesday. Um, so we're right over here, Tuesday before the open. So we got Bath and Body Works. Haven't been doing really good. Okay, Bed Bath and Beyond and all of these Bath and Body stores, they are closing down where I am. Some in the United States, some in Canada. They're not doing really well. So look for these things to not have good guidance. I don't know, unless they can recover. Earnings 0.33 cents. Revenue not that 1.37 billion. We'll see what the actual numbers are that come out here. Growth doesn't look too good. If you just look overall in your malls and your outlet stores and your outdoor malls and things like that, look, is Bed Bath and Beyond, are these Bath and Body Worlds, are they thriving? Are they having difficulty? Do you see like 50% off store closing signs out there? What's going on with these things? So that kind of will give you an idea of maybe what to expect in earnings. And then if you want to trade this company individually, look at the equities. Look at, that's the ticker, BBWI. You can see what it's trading at. You can trade this specific company if you want. Some of these companies are very, very volatile. That's why I like to stick with the bigger securities unless I know a lot about this company, okay? Because if you do get caught in some of these things, they could be very volatile. Like, did anybody see over the weekend, again, GameStop and AMC and things like that? Roaring Kitty came back and all of a sudden it shot up again. So it's very volatile. Like, those things can shoot up 100% and next day they can dump right back down 100%. So you have to be very careful with what you're trading and how you trade these things, okay? So we don't have too much coming out. Tomorrow morning, Donaldson Company, not some big names that maybe you're too familiar with. So let's see what we got Tuesday after hours when the markets close. We got CrowdStrike over here at 405. Hewlett Packard Enterprise, okay, over here, pretty big corporation. So maybe I'm going to keep an eye on Hewlett Packard over here on Wednesday after hours. Tuesday after hours. Let's move into Wednesday pre-market. Okay, Dollar Tree. I've been talking about Dollar Tree, Dollar General, Dollarama, all of these dollar stores, bargain stores. How are they doing? So we'll see the earnings for Dollar Tree. We got some Ollie's Bargain Outlet Holdings. Okay, so you can see our retail outlets over here. Again, see again how consumers are spending money. You know, this is where a lot of consumers go spend their money at the dollar stores. You can get all kinds of daily necessities for pretty cheap in here. So we'll see what they're doing in here. United Natural Foods, Campbell Soup Company. I used to trade this years ago, Campbell Soup. Okay, so then that's what we have. So we got some consumer spending over here. We're gonna watch on Wednesday before the open. Let's see, Wednesday after hours. Wednesday after hours, midweek, Lululemon Athletica. Okay, so a lot of you guys wear, the ladies, you wear the Lululemon and things like that. Did you know that you can trade these companies? You can buy their clothing. You can follow everything that they're doing. You know, if you're interested in Lululemon, then maybe put this on your watch list and watch how it moves for a couple months. Look at the option chains. Things like that. Just learn. If you're interested in this stuff, then follow something that you know about. Okay, first thing, that's like a little tip. If there's something that you know about, then maybe that's where you start. Don't start with a company that you have no idea. Like if you've never heard of Semtech Corporation over here, don't just jump into this one. Maybe you've heard of Victoria's Secret. Maybe you've heard of Five Below. Maybe you've heard of Lululemon. This might be where you start, okay? Start with something you're familiar with. That's how I always look at this when you want to trade options and things like that. Start with something you're familiar with because you got a little background on it. You know a little bit about it. Maybe you wear or you use the product, and then so you know how it trends. You know when it's busier. Probably, I don't know. Like I'm just hypothetically speaking here. Athletic clothes and Under Armour and more workout clothes. They're probably in more demand in the summertime when people are probably working out more and things like that and getting outdoor and getting active as opposed to the winter months. So that's kind of, you want to follow seasonality. You want to follow trends with the certain corporation and things like that. There's more obviously that goes into it, but again, when you're just starting out, you might be a beginner getting into options or equities or trading these companies individually. It might be a little bit overwhelming because there's so many of them. So where do we start? Start with something you're more familiar with. Okay, so we've got Lululemon, Five Below, Victoria's Secret over here. A lot of these have been shutting down, Victoria's Secrets and things like that. So we'll see exactly how the earnings look, and then maybe we'll start to project for the next quarter. Thursday morning, okay, NEO. This is a big one. NEO is EV. They're kind of like Tesla, but in China. Okay, so NEO, 5 a.m. Eastern, Thursday morning. I'm going to be following this. This could be like other EV securities, could piggyback off of NEO. For example, if they have really, really good earnings, they have good forward guidance, maybe you should see maybe Tesla get a little bit of a push as well. If this one has really, really like they do not hit their earnings, they have really disappointing earnings, forward guidance is pretty bleak, then maybe you might see a little bit of a dip on also like Tesla or anything you're following in the EV market. So NEO, it's a big name in China. It's kind of Tesla's rival over here. So we'll see exactly what they're doing. Again, I do trade Tesla with options, so I will be following Thursday morning to see what NEO releases over here. We've got Big Lots, Schmucker over here. Toro Company. Okay, so Toro, some of you guys are familiar with this, farming, lawnmowers, things like that. Big farm agriculture over here, John Deere, Toro companies, those things. Again, if you're in the farming industry, I know a lot of farmers, and they trade farming companies. Why not? They've got the knowledge about it. They know exactly what's going on. So why not make a little extra money with the knowledge that they know? Okay, so they're focused on the farming industry and agriculture and things like that. So again, that's what they do for a living, and then on the side, they trade. So that's what I'm trying to make you guys aware. Follow something that you guys are interested in. Okay, there's something for everybody here. everything. And then when you dissect the different sectors in the markets, there's something for everybody, okay? I guarantee you'll find something. And then Thursday after hours, we got DocuSign. Okay, some of you guys are familiar with this. Online, when you got to sign a paper or a document or something, you just log in here. They give it. You kind of do an online signature, and boom, it goes through. So DocuSign. It's got earnings, 79 cents per share, 706 million dollars of revenue. So we'll see what DocuSign has. So I'm just, again, going through looking for the big names. There's obviously a lot of things you can trade in here, but I'm kind of focused on the big names. I look for the big movers. So Friday pre-market, we only have two, so pretty light day Friday, and then we saw after hours there's nothing on Friday. So make sure you guys are aware of this week's earnings. There's not huge names like we had last week. But there is still some names to pay attention to, okay? Moving over, Discord, guys. Okay, so some signals that came out today in our Discord. This one was a buy NASDAQ up here. We're looking for buys above 18,490, 500 area. We've got a nice bar that closed above and then continued to move up. Also watch nice wicks, nice liquidity wick came down there, took out the lows, swept those tweezer bottom lows, took out the liquidity down there, came back up, nice bullish candles. We got one that closed with positive volume above the area, and it ran for over 100 pips, 120 to be exact. And then we were looking for a sell on US30 below here in the afternoon. Kind of this was in the afternoon when I was telling you guys, I don't know if you guys caught it, but Dow Jones had a little circuit breaker today where Warren Buffett's security, Berkshire Hathaway, it glitched and it dropped 99.9%. Like it was a glitch. The market picked it up and kind of halted, and that was when kind of this was coming down, so we were looking for continuation sell to the downside to maybe trade into this big candle over here. You got your first bar closing below. If there's any pullbacks coming up, we're looking to continue to drop below this nice psychological level of 38,500, and sure enough, it started to kind of build momentum, close below that area, come back up green, assume it is coming up green to about 50% or up to here, and continue to push down, filling the wicks and starting to continue to go down, where it dropped real nicely, pull back again, pull back into the big body candle. Yes, it was a little bit above the 50%, but if you wait for bodies also to close, it came up, got rejected, came back down, closed with some red volume, came up again, and then continued to drop down. So this area was support in the past and turned into resistance in the future. I would bring this box across if I was still trading and continue with maybe if it comes up, see how it reacts in this box, unless it's making some new structure at new areas, okay? And then kind of came all the way down to a level of support, which we identified over here, 38,298, 38,300. So that was kind of like a zone fill from 38,500 to 300. That's a 200 pip move. And then you see when it broke that kind of 300 level, it came down, back up, came down, back up, came down, back up, came down, back up, and then one final one where they kind of took out the low, and then they closed it with a nice positive candle coming back up, and then starting the reversal, kind of maybe a V recovery. So once the market settled with all of that market halt and everything like that, once the market recovered, then it was a nice time to maybe buy. If you were in a sell position, again, maybe close out a portion of your trade. Okay, so those were a couple signals that were sent out today. Continue moving forward. Everyone on YouTube, thanks guys for joining. This is our free Telegram channel for you guys. Hopefully I pinned it at the top of the, yes I did. I pinned it at the top of the YouTube channel for you guys. So again, these are the trades that I just recapped that we show you guys in here. There is free signals that are provided in this group as well. It's our weekly trading schedule here. Sorry for the delay tonight. We kind of had some audio issues. I kind of started 15-20 minutes late today, but I'll be back at the same time, 9 p.m. for the rest of the week. snipers in Zoom, we've got our weekly webinar Wednesday at 6 p.m. and then we'll have our live Tokyos, okay? And we have live New Yorks and London's. Shahab guys in Zoom will be taking the night off. His father or his grandfather passed away, so we're gonna. Shahab deserves a day off. Hopefully he can recover and he's good to go on Wednesday or Thursday, depending how he feels. Okay, it's always difficult losing a grandparent. I lost my grandmother a couple years ago, and she was the only grandparent I knew or had, so it was tough. Let's all pray and give our condolences to Shahab, and hopefully everything is good with him. And then Dave's got Wall Street. Okay. And guys, our website, our YouTube channel, thank you guys for all the subscribes and the follows. And then our SST kill shot over here. If you're interested in Expert Advisor MQL5, you can visit this over here. You can download the free demo if you like and get started over here. Okay, so let's get into the charts because it's 10 o'clock. We've already missed a lot tonight. So let's go to the daily. What we're going to do is we're going to hit up gold. We're going to hit up Dow Jones and NASDAQ, and we're going to do higher time frame analysis. So we're going to look at the daily, and then we're going to go into the 4 hour, very similar to how we started last week. And then we follow the higher time frame moves throughout the week. We'll recap them. We'll talk about them. We'll look for specific areas maybe to buy or sell the market. We'll see if it's consolidating. We'll just see how it's trading into this week's news and events. Okay, and remember, what we do have this week is NFP on Friday morning. Okay, so let's get started with gold. Single chart here, gold on the daily. So you can see I'm on the daily, where each one of these individual candlesticks is one complete day of trading. So this is higher time frame. This is not for scalping or anything like that. This is more for looking at the higher time frames. This is more looking for maybe some swing opportunities on the 4 hours, or to see overall how the markets are moving. Okay, so let's just talk a little bit of what we see here. You see this strong bullish rally coming all the way from the early March, consolidating right here and continuing to push up here. Let me just change the color of this so you can see. Right over here, this arrow. So you can see we started down here, kind of consolidated and continue push up. So the overall, when we're talking on a higher time frame, if I'm talking on maybe the monthly, like from March, we went through April, we went through May, we went through June. It's overall gold is bullish. Okay, if we're talking all the way down here when gold was 2,000, 2,100 an ounce, it went up to 2,200 an ounce, it went up to 2,400 an ounce. Then we pulled back, and you see how it's still holding a lot of support from down here. So overall, monthly, weekly gold is bullish. However, let's start to break it down now into the daily. Okay, so let's just start to identify some key critical zones. Number one, when we had this pullback coming down here, you see this level around just below 2,300 right here, kind of held good support right there. Held good support right there. So if I draw this box and I bring it all the way into the future, have we came down in and traded into this level? No, we haven't. Okay, only down here. Only here in early May. We came down in here and then we bounced right back up to the all-time high. So you see where we're trading now on the daily. Yes, maybe gold will come down and trade back down into this green box. Maybe might hold as support, might be another bottom there. Maybe we do come back up. Maybe it breaks through there. Maybe there's a lot of supply, there's a lot of selling momentum. They break this, comes back up, we flip it green to red, and then maybe the daily this starts to build as maybe a resistance area. Maybe it starts to consolidate here. Then it starts to break down, and maybe we could be targeting down into here. Our next zone right below us. Right over here where the market held and pivoted right there. So let's bring that zone across into the future. And let's just kind of, we're nowhere near this, but that's just hypothetically, if it does come down there, we're going to see, will it hold as some support here? Will it come down and then bounce back out of here and start to make its way back up? Will it come down here? Will it come down and maybe consolidate somewhere around here? That could be a possibility, but let's just first see if we make our way down here. Currently, we have a strong daily bullish candle. Okay, so I'm just giving you guys some scenarios. Okay, I'm going to get rid of all these arrows, but you guys understand what I mean by that. Maybe sometimes we got to let the market maybe come down and test this area again. Maybe it doesn't come down here, but you see how I'm just kind of getting my daily zones to be ready just in case the market does come down here. Okay, do you guys have any questions before I continue moving forward? Any questions, guys? No? Okay. Okay, good. So now we've kind of established a couple areas of support below us. So what about we look where our resistance is, or supply, or where the market was getting rejected. Okay, so this was our previous all-time high. Most of you guys remember this. In early April, we went up there, we hit that all-time high. It came up again, got rejected, then they pushed it down. This was our new all-time high right up there at 2450. Nice psychological area. We didn't get up to 2500, but you can see there is a little bit of structure from that previous all-time high to that wick. And if I bring that same size box across and I make it red. Okay, yes, I could have gone up to that all-time high. I could definitely do something like that, but I kind of want to keep it where the volume traded. It traded right up there and went back down. It hit the top, hit the bottom of that red box and went down. It broke through there. That was the impulse for the new all-time high hitting 2450, and then it got rejected. Then the volume traded in that box and then moved away from it. Okay, so I'm going to keep my red box right there and then just make mental note of the all-time high that it was an impulse break up there. Okay, and then now you see how we're kind of consolidating. So on the daily, if I was to trap this entire area right there, the market is moving pretty sideways. Okay, yes, it had a 3-day push back up here, and then 3-day move coming right back down, and then starting to come right back up. We're going to see, will it make an attempt to get out of here this week? And we do have NFP this week. Or will they just continue to trade it sideways and then maybe break down here and then we test down into this green box? Okay, so currently it is kind of consolidating on the daily. It's been consolidating for 1, 2, 3, 4, 5, 6, 7, 8 days now. And it can continue to consolidate. But if we start to look at some other key levels on the daily, now let's look for some yellow line point of interest. Okay, so yellow line now. Right here, I'm going to place a yellow line right here. If you guys want to do it with me on your charts, like right around here, and I'll explain why I'm placing a line right here. Okay, so this area, yellow line, 2325 area, 2326 area. You saw the mic is in my beard. It's all good. I got a big beard, so the mic might be in my beard. Don't worry. Pay attention to the candlesticks. Don't look at my beard right now. Just let's pay attention to the candles and not pay attention to Ron's beard right now. I know I've got a beard, and the mic is probably in it. Can you guys hear me, or is the mic in my beard and you guys can't hear me? I will not shave for you. But this yellow line that I placed right here, okay, you see here how kind of a body closed above it and then kind of came down. Yeah, it was a little impulse in around the area and it came back up. It came down, same area, touched it, went back up. Came down, touched it, went back up. And then over here you see like the red bar closed below. It came back up green, but then now you see the yellow line is acting as resistance now. So it pushed down, pushed down, pushed down, pushed down, pushed down. And then we get a green candle close above, and then we continue to make our new all-time high. Okay, and since then we came down red all the way down to here, the yellow line again. From now I can see how it's transacting here in the present time. It came down and was support, and it came right back up. So that area that I just kind of consolidated, that's what I'm placing my yellow lines. So I'm going to place now a yellow line up here for resistance, and then I can see over here how it was acting as resistance right there, resistance there, turn to support here, resistance right there, resistance there. Now we got the red candle close below, and then it came up 3 days green, and then right up to that line. Where is it? It's around 23.62, 63 area. And then red candles came all the way right back down to where our yellow line. Yeah, there was some impulse breaks, but the volume was still closing above the yellow line. It came back up almost yesterday into that yellow line, but not quite. Okay, so you see now how it's kind of consolidating. Now, where are we going to break through out of this area? So again, our options, okay, our options are, yes, it could possibly break out of here. It could, okay, so I'm going to run you the options. It could break out of here as an impulse, come through there, big green candle, and then get rejected, and then come back and maybe close below, and then retest, and then we're coming down. And then you see how that could be a possible head fake. We're kind of like this candle right here. How this candle right here on this day, Friday, May 10, was green, 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 came up to there. Then the end of the day, they rejected it and they closed it right at the yellow line. And next day kind of opened a little bit green and then they brought it right back down. Okay, so something very similar could happen over here. It could break out green, be an impulse candle, and then again, judge a candle how it closes. So maybe near the end of the day, kind of maybe it gets rejected and comes all the way back down and close below here. Okay, that is one possible option. We could also have a green candle that breaks out of here and closes above this area this week, and maybe it comes back down, but uses this line, this yellow line, as an area of support now, and maybe holds, and then maybe the buyers now are supporting that area, and then all of a sudden gold is making a nice bullish move right back up to test this red box and maybe the all-time high up there. Okay, so those are some possible options above us. Okay, we could trade in between the yellow lines. Maybe the market of gold is going to continue to consolidate this week. It might come up, maybe tomorrow back down a little bit, might come back up, and then might go back down, and then we're still trading inside here. We can still definitely trade inside this box. It's a good range on the daily, 23.25 to 23.60. Okay, that's a 350 pip range on any time frame. Can make some moves, okay? But if we're looking for more swing positions like on a breakouts and retests and to maybe come back up to the all-time high or maybe start to selling off, then what we need to see is some 4-hour candles closing above or below these areas. Okay, so point of interest on the daily this week that I will be watching. I'll have an alert up here. I'll have an alert up here. I'll follow the volume inside. That's where maybe I can do some intraday trading inside, but the bigger swing trades will be either above here. If it comes up here and it gets kind of rejected up here, then maybe I might be looking to maybe possibly short that yellow line and bring gold back down to test maybe 50% of this bullish candle, get it back down to 23.40, 23.35, maybe test back down there. If I do maybe initiate a sell, maybe my stop loss will be inside here, depending on how the 4-hour candles are trading. I'll get into that when we get to the 4 hours. Okay, so let's just follow fresh volume yesterday and today. Okay, so last week we had a little bit of a sell, midweek sell on gold Wednesday, and it's still coming down from these two big bearish bars. Wednesday, May 22 and Thursday, May 23 started that big push down, but then it kind of rotated right back up. There's our neckline on the daily, came back down red. So we kind of double bottomed, one bottom here, one bottom here. And now we're coming right back up. So let's follow this volume. So Friday, gold was bullish, came all the way up to that yellow line, and then they rejected it. And then gold Friday came all the way back down to where it opened and pushed down. They made a new weekly low. See that wick is lower than that the previous day, Thursday, but it came back and closed right there. Now, the weekend, Friday, then we have Saturday, Sunday, and then we move into Monday. Today, yesterday I should say, they opened gold and pushed it down. It was red, red, red where we made right there. So that is our weekly low, 23.15. And you see how it's still kind of above that bullish candle right there. So it is still, this is a higher low here. We still have a higher low here. So there is buyers still holding this area of demand on gold. It didn't really close below 23.25. So it came down there. Yes, they did create the low. So let's keep that in mind for maybe if the week continues to go down on gold, it did create a new lower low. We need to create new lower lows in order to continue to push markets down. If we have tweezer bottom lows equal lows, then the market is maybe supporting the move to continue to push it up without breaking the psychological low. So this one did break the low, but then it came right back up, and it was really bullish yesterday. Came all the way right up to the high, which was 23.55, and then we came down and we closed at 23.50, that nice psychological level. Okay, so now again, I'm going to get another point of interest. Okay, I have one yellow line up here and another yellow line here. So what I'm going to go off of yesterday's volume, the way how we opened and we closed, 50% of it is right there, 23.38, 23 around 37, around here. But I also have a body and a body. Okay, so I'm going to place now I know it's going to look messy, but I got another yellow line here. Okay, so this yellow line is now first area of support. If we come down, continue to come down red, 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 I would like to see how the market reacts right here, right around this yellow line, give or take maybe 23.40 and maybe 23.35, but inside here. I want to see if it will come down and buyers hold this area and then maybe continue to push it back up. Then maybe we'll break out this week out of this range and continue to push up to 23.80 and maybe 2400. So I'd like to see if this can hold support. If it can't, then this might be our next level of support. Okay, and then if I start to look at some kind of a bullish demand zone, you know how sometimes I look at a yellow line as an area of reference, then I look for a zone below me. So if I use my yellow line and then I come down to that wick right there, so you see what I did, the yellow line, and then I came down to that wick. Now I bring this box across, I see we hit it right there and it came back up. I bring my box across. I see this one came right into the box and went right back up. This one came kind of right at the bottom of the box and went right back up. And this one yesterday, I should say, completely broke it down, made that new low I was just talking about, but came right back up, roaring right back up to close near the high. Okay, so this area, I could, yes, definitely go all the way down there. Okay, I could, but I kind of want to keep it more in line with where there was more physical touches. There was a physical touch here, there was kind of one right here and one right here, and then if I extend it to the left of the chart, I can start to see I got in there and there. So I'm going to continue to extend that zone across and make it green. Okay, so just to kind of visually illustrate how maybe the depth of market is still building. Okay, and then still this area is bigger demand. It's sitting in the market down there. Okay, now let's follow today this candle that opened right now. So we closed, we opened. It was initially bullish right up to there to 23.52.53. We couldn't even take out yesterday's high, let alone Friday's high, and let alone the structure up here. Okay, so it did come back down. Then it came right back down to where we opened. Then it pushed down for our daily low right there. So 23.43. I'm going to place a purple line right here. That's our daily low. And yeah, I will also place a line at our daily high, just so we know our daily range today. Okay, so we're ranging inside here. Right now, it's still got a bearish body, so the sellers could continue to push it down and try and come down to our daily low. If they have some momentum, they will probably break it down and test 50% of this critical area on that big bullish candle. And if it doesn't hold support there, then we might be coming down to test our green box this week. Okay, if it continues to build, and maybe I'm thinking we're going to consolidate in here. If it continues to try and come back up to the high of the day, we have a possibility we can break fresh yesterday's low and maybe try for last week's high. But I'd like to see if gold can break out of this area. Okay, this 23.62, where our resistance is. For example, if we're seeing like a double bottom being created on the daily, where it came down here, one bottom, there's our neckline resistance up there. It came back down. This is the start like kind of our double bottom, okay? But it didn't come up to our neckline yet. So maybe it just came up to here. Now we got to consolidate, maybe pull back into here. That's why I'm looking to see if we can hold this yellow line and maybe continue to build that strong depth of market momentum for gold. Then we break out of here. we get our maybe our impulse break, and then maybe we pull back, and then we want to use this yellow line, which was resistance here, maybe as support, and then we get our buyers of gold, and then we're breaking out bullish this week, maybe with NFP at the end of the week on Friday morning. Who knows, okay? But that could be what I'm watching to see if we get some 4-hour volume to close above this yellow line to maybe orchestrate that move. But also, we do have a nice area of structure right here. There's a body to body here. There's a body to body here. So I'm going to place a yellow line because, yes, it could be a nice move to fill right up to that range. Again, if I'm in a buy or 4-hour move and it fills up there, I kind of get my ruler and I measure from yellow to yellow line. That is approximately 170 to maybe 200 pips up there, if it can get up there. If we continue to push up, there's 50% from that red body down there. Half of it is right in here. Again, where do you have some structure? You got some structure and some wicks right here. So I would place another yellow line. This is how I kind of look for my 4-hour moves. 23.97.98 off by $2, make it 2400. Get it like right up to almost 2400. But I'm going to keep it identical with those wicks, with that wick right there and that wick right there. Kind of represent half of that red candle, open close, half of it somewhere right around here. So if we start to move bullish, let's test this 23.62 first. Let's make our way up to 23.78 and then test maybe 23.98, 2400, and then who knows, maybe we're going to get into our all-time high supply box up there. However, we are still pushing down. Lower high, lower high, lower high structure, and then the two big red body candles coming down. So maybe we might continue to come back down this week. Maybe we'll come down and we'll test this area, but we still have, it's early in the week, and I want to see what will happen at this bullish candle that printed yesterday before I can say that we'll break down. But if we start to get a bearish candle coming down and it doesn't hold here, and the sellers continue maybe push it down close near the low, then we pull back on Tuesday, and then maybe Wednesday, midweek, we're breaking below here, and it closes below. This might be area of resistance, and then we're selling gold back down to here. Okay, so some key areas to watch on the daily. I know it's early in the week, but I would pay attention to these areas. What I do now is I go to the 4-hour, and then I start to look at what the 4-hour candles are doing. Okay, so these are 4-hour candles. So you can see how I kind of have it boxed in here. This was the big 4-hour drop, come all the way down. We recovered, we found our bottom, we came back up, resistance, got rejected there, came back down, it bounced out of the green box, nice a rejection candle on that 4-hour. Continued to consolidate gold. We tried again to come back up here. They rejected it Friday, 9 a.m., Wall Street, 4-hour candle, pushed all the way down. We kind of consolidated here on Sunday, and then we started Monday, pre-New York, and then also New York Wall Street, come right back up. So our 4-hour candles are kind of consolidating right in here. So what I do is I trap these 4-hour candles exactly where the purple lines are. Okay, I just trapping today's daily volume. I make it neutral. Okay, and then I look overall. We do have big sell-off coming down. Okay, but it is building here. Came back down. Came back up, back down. They broke the low, but good recovery down here on that 4-hour candle that came up and closed again. So we are pushing up. So what I'd like to see on the 4 hours of this week is, can a 4-hour candle make its way back up here? We had an impulse break, but then got rejected. We got this little doji candle right here, and then now we're pushing inside here. We're trading. Can we get a 4-hour candle that maybe can pierce through here and close above, and then start to consolidate here, maybe catch that, then we're making our way to test this and break out. Okay, so where will the 4-hour candle close? I like to see if we can get some momentum to continue to come back up here. But we've got a red candle now, which is going to close in 2.5 hours, and it's pushing down. So if the red candle comes down, closes somewhere below our daily low, the purple line, then I know we're closing below 50% of this strong bullish candle that started at Wall Street 9 a.m. If it comes down, closes there, maybe we come back up, it gets rejected, then the selling pressure will continue to break down and test maybe this green box down in here. And we can see that they broke the low, but it came up quickly. Okay, so we want to see maybe if the sellers will bring it right back down. So what I'm looking for now is what is the overall trend? Okay, so this is what's hard. Now, if I look at my 4 hours, it kind of looks like a head and shoulder pattern that's been building for a long time. So if I see like over here, this area is my left shoulder. There's the head that broke out to the all-time high. We traded right back in. You see how we're just trading again inside this zone, right in here, 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 here. So we're still in this kind of bigger right shoulder. So maybe a head and shoulder pattern continues to maybe sell back down in here, come up, then they really drop it down through there. Okay, but what we need to see is some red volume to close below this purple line, below 23. 42, 43. Close it below there, then we might push down and start to take out this area of structure at 2306 and maybe test our bottom green box. However, they are building a little bit. Okay, it's got support here, it's got support here. They took out the low, they took out the liquidity, so maybe they took out all the stops down there and they brought it right back up, and now we're pulling back. So maybe this is going to be a move that gold is still holding, might bullish flag in here and continue to come up close here, and then we're breaking out above here. Okay, so what do you guys think on the 4 hour for gold? Do you guys think that maybe the buyers will hold position in here and continue to come up option 1, this bullish arrow, and we break out bullish? Or do you guys think it's going to be option 2 and we're breaking down bearish and maybe going to come down? What do you guys think? Yeah, Ricardo, I think news will make the decision. Absolutely. Yeah, the news will decide, but maybe we can predict maybe the move ahead of time. So, um, what do we think with unemployment numbers? Okay, so that's another thing. If we're putting the pieces of the puzzle together, do we think there's going to be more individuals applying for unemployment? Then that's not too good for the US dollar. Then we might see then more money go into gold. That would be bullish then. Do we think that the labor market is going to be good? Maybe less individuals applying for unemployment. That's good for the US dollar. Then we might see some selling pressure in gold. Okay, so it's still early. It's not, we're Tuesday, so it's still lots to go. But what I'm going to do is I'm going to kind of look for, just like how I do a 5-minute setup. If I do get my bullish 4-hour candle kind of closing above here, then I'm going to look for 4-hour candle to close, maybe give me a retest. First area I want to test is obviously the resistance line, but if we're coming up with higher low momentum and we break out of here, we have maybe a high probability we're going to break out of this neckline. And then where could it go? First thing I'm going to look for is to come into these equal high wicks, kind of right over here at 2370, but ultimately maybe get it up to test my daily 2380 area of reference. Again, if I do, that's a 1-to-1 risk to reward. Do I want that much risk on this trade? Depends where and how the 4-hour candle closes. So if it kind of closes right near here, takes out that high, closes, maybe I get a retest and I'm in the trade. Do I want to keep my stop loss all the way down in the green box? Maybe then I reduce my stop loss and I use my yellow point of interest by reducing my risk. And then if it comes all the way up to that, I'm getting a 1 to 1.7 on my money. But that's a smaller stop loss. Like normally, if you want to be below bigger structure, you're risking a little bit more. But maybe I'm going to target just below this daily critical area, because I can see how it traded in the past. Maybe I want to be below that body. Again, I can alter this to my own liking of my risk, and depending what my reward is. Okay, so that's how I'm going to set up maybe a possible buy opportunity to come up to there on gold. And remember, we might be still consolidating in tomorrow's call. We might have some fake outs on the 4 hours. So that's why we got to watch candle by candle. And I wait for also 4 hour candles to close. But if I see it building, then I can go from 4 hour to 1 hour, and I can start to look at the 60-minute candles, and maybe I can get right in on a 60-minute close and a retest on the 60-minute. But then I'm playing the 4 hour momentum on that candle. Okay, so there is things that you can do, but just figure out what's best for you. Either wait for the full 4 hour candle to close, or you follow it how it's going, and then maybe you enter on a 1 hour. But you got to have a plan. You can't change it up every single day. Make sure you're consistent with your plan. Also, I'm going to be looking for a sell setup. Okay, if something happens up here and it's kind of like a fake out where I look for a green candle to come impulsively but it doesn't close, and then it gets rejected back down, and then they're bringing it back down here, I might be looking for that sell. Then I see it's a fake out. Okay, so there's not 100% guarantee it's going to go buy side. I watch to see what happens. It might break out of there and then get rejected. Then I gotta again maybe have a sell side bias. I'm only entertaining this trade if I see a 4 hour bullish candle approaching up there, or I see a physical 4 hour candle close above there. If I see rejections or a fake out, then I might be looking to sell the market. Okay, so then the sell would be below this 4 hour low at today's daily low, because it could just come back down here and go right back up. So I want to see a physical 4 hour candle maybe close below here, and maybe to continue to sell gold down into this bigger area of demand on the 4 hour. So what I'm going to be looking for this week is an alert right here. I will be testing down here for maybe a possible sell opportunity down here. And then what do I want to do? If I get it down, coming down to the green box, then maybe right down to that green box. But if it can maybe come down to take out that low, like if I get into the trade and it's coming down here, yes, I do need to decide what I'm going to do there. But if it's a bounce and I'm still holding and it's a lower high, and then it closes below this green box, then I flip it red, and then it's got enough momentum to take out that wick, and that could be the big continuation. Take out that wick and then drop down to, there's the 4 hour structure. So right there I'm going to draw a yellow line. So I'm preparing myself if it does come down here, because look at how many times the 4 hour candles held in the past here. 1 time, 2 times, 3 times, 4 times, 5, 6. You got like 8 times. 8 times 4 hours. Like that's a lot. That's a lot of daily support in there. All around here on this date, from Tuesday, May 7, Wednesday, May 8, going into Thursday, May 9, and then the Friday kind of started that bullish move. So if it does come down in there, I gotta have heads up down there, because it could come down there, and then history is showing us that's where all the support was. That's where maybe that demand area is, allows the shorts to cover, and then it might be a buying opportunity to take it back up. Okay. Again, it's early to say. It's just, for me, it's Monday night. So it's early in the week, but this is what I will be looking for. Okay. So I'll be looking for a move above. I will also be looking for that play to come down, down into here. Also, I am aware that 4 hours could just consolidate inside here. Again, that's where I go maybe lower time frames, 15 minutes, 5 minutes. I can do some scalping in there. But for the 4 hour moves, I'm looking for the bigger plays. Okay, so that's what I'm looking for on gold. We will continue to update this week with you guys. Okay, so what I do is place alerts. So I right click, add an alert up there, create it. I'll also create an alert down here, and then it might notify me. And then that doesn't mean I just jump in and just hit the buy or sell button. It means I look at the charts, I observe, and then I watch. Okay, and then but at least it lets me know if I'm away from my trading station, or if I'm upstairs like I'm making lunch or something, I get an alert. then maybe I come down and I pay some particular attention to how the volume will close. And then I pick my time frame. Am I going to follow the 4 hour? Am I going to jump in the 1 hour? Like these are the 60-minute candles trading on our 4 hour chart that we made. So you see our 60-minute candles here was kind of an impulse break, consolidate, come back up, low volume. Then we had this sell at 2100, come down, came back up green, coming down. So maybe I want to see a 1 hour candle maybe physically close below here. Maybe I want to see a 1 hour candle physically close above there. Maybe I can watch how it kind of consolidates here. But gold is not just going to trade in here all week. We know that there's going to be a possible move to the upside or there's going to be a move to the downside. Also depending on news, okay? However, we can speculate which way it will go, but right now it's kind of consolidating inside this area. If you kind of bring this consolidated box to the left, you see right here, consolidated for 4 hours, 4 hours, 4 hours, 4 hours, 4 hours. Then it closed above there strong, but look, it was a fake out. It faked out the high, and then they brought it right back down. And then it came right back in, and we're consolidating in this box again. This could be maybe a possible inverted head and shoulder pattern on the 4 hours. So here, this box is our left shoulder. There's our V bottom recovery in that daily demand. There's that nice V bottom. That created the inverted head. Now we're consolidating in our right shoulder, and then that's all we need is to kind of follow this bullish path. But we also know that there could be fake outs up there. Just like it faked out the market here. It kind of closed above, came up, and then boom, they brought it right back down. So let's see if they can kind of create the depth of market with higher lows. Try again, one more attempt to bring it up there, close it above. But now the depth of market will build. The fake out already happened. Caught some good support down here. It's coming right back up. Maybe we need it to consolidate, get more bids in the market, and then maybe we'll take gold, continue to go up bullish. Okay, so that's what I'm watching, guys. For gold, I'll give you guys the chart in 1 second. Okay, Zoom chat. There's a link, trading view link of our gold on our 4 hour. Okay, and let's let that develop. Let's watch it. You know, it might develop, start a little bit in London, into New York tomorrow. But that's what I'm kind of looking for gold. Okay, and just expect to maybe some inside consolidation. Maybe expect some fake outs until we get some bigger news in the markets. Okay, so that was gold. Let's move over now to some index related securities. Let's look at the Dow Jones and then we'll do NASDAQ. Okay. So Dow Jones on the daily. Let's go to the daily. So I was talking about earlier, if you guys caught it today, Dow actually halted for a couple minutes today. It had to do with a little glitch in the system. I don't know if maybe sometimes this was the first time you guys have seen or heard about this, but maybe do your reading on it and you'll get more information than I'm providing. But Warren Buffett has a security, Berkshire Hathaway, and it glitched and it dropped 99.9%. Uh, and the market picked that up quickly and halted and stopped all kind of trading today for a couple minutes until it got fixed. And that's technology. That's what happens, guys. Things can happen. Sometimes if you catch it early, you know, there's times where you get rewarded for catching these things early. Or when the halt opens up, you know, there could be panic in the market. And then that's why it continued to sell off this afternoon. But it found a little bit of a bottom and it came right back up after that kind of, all of that volatility kind of recovered. Okay. So let's take a look at kind of similar how we did the gold chart, but we're going to do it a little bit faster. So overall, we are on the daily. So you can see down here, it is making a nice bullish rally. We broke out of this area of resistance right over here. It came up to, this was a previous all-time high. We came down, there's double bottom support right there with a liquidity grab. We continue to come up to new all-time high, and there's kind of like a second top, I consider this to be one top, even though it's a double top right there that put that leg down. But this could be considered one whole top. And then here's a second top. And then that's our next leg coming down. But found a little bit of support, bounce. Today's daily candle, that was that kind of Dow sell-off, that glitch that happened, then it kind of recovered a little wick at the end of the day. But we still have that red head still pushing down. We have this tiny, tiny, tiny doji candle that just started right now with very, very thin volume. So will we continue to maybe consolidate in here and Dow Jones kind of breaks back up to 39,125, maybe 50% up here, 39,400 again? Or are they going to continue maybe sell it down to test yesterday's low wick, and then there's our break of support and we drop? Okay, so this week I like to trade US30 a lot, and I'm really interested in to see what move happens this week. Okay, so let's just do what we did with gold. Area of support right here, pivoting areas. You can see in the past here it was resistance right there, then turned to support right there. So let's just continue with our green theme, where over here it was red and then turned green. You see the bullish candle close above, a retest, one, two, three wicks, green box, respect, and then go back up. So let's just take this box and go into the future. Okay, so you can see how kind of it lined up perfectly with these daily candles. Yeah, there's those impulse breaks, come down, come back up, close above, come down, close right there, come up, get rejected. That's that inside consolidation. Then you look for something unusual in the market, and this candle kind of maybe gave a little bit of a clue how it came red, 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 red down into there. Look at where it dropped right into. Like, look at that daily point of interest. Like, I'm going to place a yellow line down here just to show you like this area. Look at it. It came all the way down right there, but look it to the left. It's the body, a wick, and a wick testing that body. Like, it doesn't get any more technical than that. Okay, I'm not saying it's going to come back down here anytime soon, but if it does, if it breaks our green box, I'm bringing that green box in the future, that could just fill right back down to that yellow line, and then we'll see if it can break a little further. If it does, it doesn't mean that the market is going to drop all the way down here, but let's just find where your new kind of level is. Right over here, resistance. That was a previous all-time high. Turned into support there. If I bring that box across into the future, I could be waiting for it down there. But there's also structure right here in the market where it came up, pulled back, kind of consolidated right here, and then continued to move up. So I have like another yellow line down there, right there. So I kind of wait for the volume to come to me. I'm not saying US30 is going to come down here anytime soon, but if it does next week, next month, next year, I will be ready for it. I will be waiting for it. Okay. Now I got to now focus on charting above us. So I've done everything below us, possible areas. I'll dissect once we get into these daily candles. But what about supply? Okay, we can visually see supply above us. Where, again, I'm going to do similar what I did with gold. Right here, that was structure when we previously hit all-time high, and then it kind of created that double top and then the drop. So I'm going to continue with that same box across, bring it into the future. Okay, and then I can see our new all-time high right here, right there. Okay, so it came up, got rejected, came back up green, and then they closed it Monday. That was our new all-time high, 40,079.5. Came and closed red, came back up again below 50%. How many of you guys are getting better at the 50% rule? Matthew, I shared the chart. It's in the Zoom chat. You guys should see it. Okay. But is the 50% rule, is it playing, are you guys getting a little bit better at it? You can do it on all time frames. Yeah, okay guys. It's how I trade, okay? So I'm telling you guys, keep it simple with your trading. Don't complicate things. And then the only other thing that you got to do is perfect your risk management. That's it. So now I'm going to get one more critical area, one more supply area. This is too high. I don't think we're gonna come up here like tomorrow, so it's up there. But what about one more level? Okay, let's just kind of get our eyes to look at one more level right here. What I'm looking at is this area used to be resistance right here. Okay, see how it came up, rejected, came up, impulse back down, red bar, come back again into the red box, continue push it down. Now I see a green candle close above the zone, so I flip it right there green. This is how I kind of back test my zone, and then I stretch it across, and then I see it came down 1, 2, 3 days into the green box, bounce back up, and then the red bar closes below. So then I just continue. When it closes below, I flip the zone red, and then I see how it reacts, where it came up to the red box, back down. Came up, impulse, close right at it. Came up again, close right at it, back down. This is when you get that shitty consolidation. So you know when you get 5-minute candles that are consolidating in here, 5 minutes, 10 minutes, 15, 20. And so, but these were 4 days. This is a daily candle. That's a daily candle. That's a daily candle. That's a daily candle. That's when we were ranging over here. So if I can just continue with this box across, see right there how the red bar closed below. Okay, so ongoing resistance. Now the same area, I got my green bars close above it. So then naturally what I would have done is I would have changed it to be green and continue to bring it across. And then right there, this daily candle came right into it, broke it, closed right in it. And then you got an ignited daily candle. What I do is I would always look at 50% of that red candle. I would look at the size of the wick, how they opened it. Didn't even open up bullish in that green box. They opened it up red ignited, and that's what continued to break the low and drop it all the way down. Did we tap into the green box down in here? No. So they kind of saved the market right here. They brought it right back up, but you see now how I'm bringing this zone across into the future. So this is where someone will say, well, Ron, all of this shit happened back here. Yeah, I know that. But now you see how I kind of flip it now red, same zone, but I flip. Now I can see how we traded right into it yesterday. And now going forward for tomorrow, for Wednesday, Thursday, Friday, next week, next month, go into August. Okay? So now you see how I'm kind of really consolidating Dow Jones into zones now, okay? And then I watch my 4-hour candles. Will they close above here? Will they get rejected? Will they push back down? Okay, so I have all-time high supply up here, lower high supply right here. We've got an area of higher low support demand right here, okay? But now let's follow more our daily candles, okay? So let's follow from last week. Wednesday, was there some big news Wednesday that caused the market to drop like this? Did we CRM, Salesforce earnings, all of those things that happened? Friday, kind of Costco recovered the market, came back kind of up. We did trade into here, so let's follow now. So this was yesterday. They gapped it up. They tried to take out the high. They failed. Came down red, red, red. I always locate 50%. Okay, so I'm going to continue with that 50% theme, but I'm also going to line up with structure to the left of the chart. Okay, so I want you guys to kind of learn how I do things. Okay, so I'm looking at open, close of that big green candle that was Friday. Half of it is right around there. Okay, if I'm just guessing. But now what I'm going to do is I'm going to kind of line it up with a little bit of structure with other daily candles to the left. Maybe I'm going to bring it right down here. Okay, the reason why I chose down here is because I see that green candle closed right above it, retested it, and went up. Then it came all the way right back down to my yellow line and went right back up. Here, kind of closed below the yellow line. Look at the retest. It came up green, 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 right up to the yellow line, and then got rejected. Here we kind of have a green candle that closed above, but it was kind of like a fake out. That's the neckline. The W bottom. You see the double bottom here, where this leg pushed down. There's my neckline. It was a false breakout where it came up green, didn't create a new high, then they brought it right back down where it picked up liquidity in that green box. It came back up, but then they shot it right back down, kind of like a triple bottom. And then look at then they got the green nice bar candle close, and then you continued that nice uptrend to the new all-time high. Okay, so I've lined up that yellow line now with some critical daily support to the left of my chart to see how it played out in the past. Now I'm going to leave it right here. That's where my new kind of point of interest is on the daily. Now what I also do is, again, as we came down, created a higher low. This is a higher low from over here. Okay, and then I see it broke that critical 50% level, came down, but then shot right back up. So now I've got another green zone. I'm going to use my yellow line and that wick to develop a green box. Now this is where I'm really trapping the volume to see where Dow is going to move this week. Okay, so you can see now I've kind of really trapped it inside here. So we could maybe trade sideways. Maybe it might come back up, test this. Maybe we go back down, we test this. Maybe we come back up. Okay, well, this might be how we trade this week inside here. But I'm also watching to see maybe do we get a 4-hour candle that will break out, close above. I change my box from red to green. All of a sudden it's holding. Then we're shooting. We're going to take out this high. We're going to shoot into 50% of that red candle. I can already see. Guys, look at what my eyes are looking at. 50% of that red candle right there. There's support right there. Then it's kind of like this M top supporting line. See where it came up? Up there, came back down, right there. We should kind of have a line somewhere in this structure. That's that double top where it came back up, and then they closed it below and then had that drop. So I don't always need to draw lines on my chart, but I'm telling you, if I draw a line, I'm looking at this area right there. Okay, why did I choose that area? I'll show you with a line. So I make it yellow right here. And the reason why I chose this area is because it kind of was support right there, resistance right there, support right there, resistance right there, a rejection right there. There's your M top. So if you see, it came up, neckline right there by the yellow line, came back up, then they closed it below. There's the retest, and there's the drop. And then over here, kind of close, support, support, support. There was a little wick that grabbed that, came to the all-time high. Now we close below that, okay? So maybe if we do shoot up there, I'm going to kind of use that area as guidance, 39,400. It's a psychological area. If I'm in a buy, then I'm going to respect this area as an area of resistance because it might come right up there and then they push it right back down or gets rejected there. If it breaks through here and closes above there, yeah, then we might push up to the bigger red box up there, okay? But I take it from zone to zone, even on the 4 hours. So I'm just trying to figure out my zones. And also if we sell this week, if it continues to sell back down, I want to see selling pressure close below this green box. I don't want to just see it come down and go back up like it did yesterday. I want to see it physically close below here so that I can flip that big green box and make it red, and then maybe they can absorb the buyers, and then it's easy for this to take out that low and then test down in here and then possibly physically break to come down in here and do something and then test that wick right there. That's the only thing that's kind of holding the Dow Jones right there at this area. If it breaks, then look at how much we can drop. Okay, there's a lot of room for it to drop down in there. Okay, but I still got to play the rejection out of here. Yesterday it came down right in there and then it got right back up. So this is where we might consolidate now. It might come out back up green, 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 but remember the red body still above us. So inside here. So I'm going to go to the 4-hour candles and we're going to watch these 4-hour candles. Okay, so you see my zone now? We've got everything is on the daily. All of these big red boxes are more like weekly supply. We've got like daily supply here, daily supply. This is more weekly demand down here. These are our 4-hour candles, how they're trading. So we had that big sell-off from the all-time high where it came down. Look at this sideways consolidation. That was that bear flag we had last week. Remember, guys, we started this. Remember, we got on the call early last week. Kind of consolidated that. It was our bear flag. So we had the rally come down. There was a couple impulse breaks to the high, but they got rejected and they closed it back down in the box. And then we physically had that red candle close below, and that was go time for that sell. Okay. Then we found the bottom, and it came right back up. But you see, from that that flag over there, it's now, you see it made a lower high, the red box now. So you see these sellers that held it here, pushed it down for that new low. The market kind of counter balanced back up, but came back down. Now look at how it's, oh man, this is like, it's going to be a very, um, like this is a week where we got to watch what's happening, okay? Because look at what they did here. They brought it down. We found a good area of support down here. It's coming right back up. We got rejected there. It had a big wick down into there, but that was kind of that glitch that happened with Berkshire Hathaway today. But it kind of recovered the market, and we're coming maybe physically. This developing in like a higher low double bottom that could physically break out of here? Test. Remember last week's consolidation box? Maybe we test in there, gets rejected, comes back. We get the opportunity to flip this red box green, catch maybe a wick or a bullish engulfing candle form through here, and then enough to come back and test up there. Okay, so we might still be building. So I got to give a little bit of a benefit that there was a strong bullish candle that formed today at 2 p.m. It didn't kind of engulf the previous red bar, but still closed above 50% of it. So right now, yeah, we could consolidate in here, but what I'm looking for is I'm looking for a weekly move to maybe close above here and retest this to continue to push up, or I'm looking for a red move to break back below here to come back in here. Maybe then I can flip my green to red, and then all of a sudden it can take out that area of support right there, and then drop down into my green box. And then I look at the green box. There's the low. If it breaks, all we have is to come down in there. We traded down here real quick. It was kind of like a liquidity grab where it just dropped and came right back out of there. When was it? It was Thursday, April 18. So yes, we could recover all the way back down there and sell even more down. Okay, but right now, if I go off of what I see, the most recent 4-hour volume from open close, if I look at half of that 4-hour candle, I'm going to kind of trap it right there, make it a little bit more. So with now, I stay on my 4-hour candles. Normally when I'm scalping, I go daily yellow, I go hourly white, and then I go into my like kind of 5-minute candles. For when I do swing positions, I do yellow as my daily, and then 4-hour will be white hourly. Okay, so I'm going to keep an eye on this level. I kind of don't want to see this break. If the sellers bring it down here, I want to see if the 4-hour buyers can hold this white line. I don't want them to kind of lose the majority of that volume today, this afternoon, okay? Because it might come down, test 50%. I'd like to see it hold, maybe create a wick here, create a higher low, and see it maybe build back to test the red box up here. Maybe it will come back up with that momentum. Maybe they pull it back down. Then I'd like to see the structure that was being built here to bring it up here. Maybe 50% is probably right around there. And then it breaks through here. And that's the impulse 4-hour break right up to my next white line, this 4-hour resistance right here. Remember last week, this was where we kind of had that trapping gap right here, the bearish flag. That's exactly how we had it last week. And we had the sell set up last week. Do you guys remember that? Where I had the chart set up like this. If it was to break below here, we were going to sell. Our stop loss was going to be, like if you want to be a little bit more conservative, 50% of that red candle. You know, or if you wanted to play that daily position, depending on how much you're willing to risk. But we had the sell set up. This is how we had that sell set up last week. Okay, do you guys remember that? If you guys were on the call with us last week, you'll probably remember that. But you see now how the market kind of bottomed out, and are we going to come back up to retrace back up to that selling area? Okay, so if I kind of stretch this zone across into the future, that's where all of that, these are 4-hour candles, 4 hours, 8 hours, 12, 16, 20, 24, 30. Like you can see, it was long time consolidating from Thursday, May 23, and it finally broke out Tuesday, May 28. Okay, so it was about 5-day consolidation before they broke it down. Now, if I'm just looking to trap volume, okay, I can see now where's their structure on the 4 hours. So I'm just going to draw a white line just to give me a signal to watch up here tonight. If it comes up to here where that green body closed above, red, 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 stopped at that white line, came back up. This red candle came down and closed right at that white line, came back up green, green, about 50% into it, and then closed below that white line. They gapped it up, they tested the white line, and they brought it right back down. So this is kind of like my consolidation area. If I don't want to trade this, what I do is I watch. Okay, I know that Dow Jones is not just going to trade inside here all week. There will be a possible attempt to try and break that resistance, okay? But it might just be, let's just think like on the 5 minutes. It might be an impulse where they break it there, then it gets rejected, and then they push it right back down, okay? And then it's an impulse 4-hour candle, and it might be setting up maybe the possible sell setup below there. Okay, so we have to watch, okay, because that could be the physical double top. However, if we get a nice green candle breaking through there and close above, then we look for maybe a pullback, and then we're driving into our buy opportunity right back into that bearish flag from last week. And then we'll see, can they break it above there? Impulse to fill those wicks. And then again, then this zone will turn into green, right? I'm just bringing that zone, that box across. And then if I get a green nice candle close above there, then I just continue bringing my box into the future and make it green. Then might come down red, red, red. Oh, now it's a green box, and all of a sudden we're coming right back up to there and maybe shooting higher. Okay, so we got to play it day by day, 4-hour by 4-hour. Okay, so what could happen if you're looking for like a quick 4-hour move, just for like a fill from there to there? I don't recommend that, like when we're looking for swing setups, but I know there's a lot of traders that like to play a 4-hour momentum, just get in and out and maybe grab a daily quick little goal. I measure that move from right there to the top of those tweezer high wicks. It's 150, 160 pips just to fill back up to the previous high right here. Okay, I know we're looking for more. We're looking for 200, 300 pips when we're on 4-hour candles. But some of you guys might be just looking at a 4-hour build and then it's breaking through here. Some of you guys might be on the 1 hour, 15 minutes, 5 minutes, and it might fill a little bit in here. You're still playing that 4-hour volume, but once it gets up here, I can see it came up there, got rejected, came up there, equal high, got rejected. There's our tweezer top highs, right exactly at 38,815. It could just come right up there again and then drop right back down. But if we physically start to close above here, switch your boxes and builds, we're coming up through here. Okay, so ideally, when I'm kind of like scalping the markets, I love looking for quick little buys right there. Okay, but remember, this is a 4-hour setup, so I'd like to see it fill up to those tweezer top highs, break out, and maybe trade into 50% of our consolidated box that we had last week. If I do take the trade, then my stop loss, where will I place it? It all depends on how and where the volume closes above here. It's hard for me to just say, yeah, I'm just going to place my stop loss right there. I don't trade like that. I look at the structure that was being built behind. For example, if the candle came up and closed like that, pulled back right there and then I initiated my buy, then I determine my stop loss. Maybe I'm going to be below that white line, maybe just below that green candle. If I really want to open it up, I'm below that liquidity wick. But ideally, I kind of want to keep maybe just below this structure if it is building. Maybe if it's a big red candle that comes down, picks up a wick and goes all the way back up and closes, maybe I'm just going to be below that last liquidity wick. But again, that's maybe a tight stop for some 4-hour traders. Again, I'm a different trader than you, so again, you got to figure out what's best for you. If you really want to give it room to breathe, then go all the way down to the green box. But you got to determine that that's maybe you're risking 150, maybe you're risking 200 pips to potentially get a bigger move to physically break out of this zone and come up to that bigger yellow one up there for the bigger move. But another thing, guys, what do you think? Do you guys think I'm making an impulse trade on the 4-hour if I go for a buy right there? Or should I be more conservative and wait for a buy above there? Okay, this is where I want to ask you guys. I want to make this call a little bit more interactive. What do you guys think? Is my buy idea, is it too kind of congested in here? You guys think if I go into that buy, it just might come, like how I said, right up to there and then comes back down and then might be coming hunting for my stop loss. And maybe I'm not looking for just 100 or 150 pips. I'm looking for that bigger move. So do you guys think I should maybe take that buy right there, or do you guys think I should go above kind of structure above there? What do you guys think? I'm asking you guys. I'm going to do what I feel like I'm going to do, but I just want to ask you guys your input. Or a possible sell. What about this? What if we sell? Okay. What if we let it come up like green to the double top, and then we watch up here to see, will they take out those highs and bring it back down and close it there, and maybe we sell. Okay, so again, this is just hypothetical situations because we're trading right in here. It's hard to say right now until something happens here. Aggressive, take the buys. Yeah, yeah, it's pretty aggressive, but if it's building, okay, so I don't, guys, I don't just trade with like pending orders in the market and they just trigger automatically. I'm always by my trade station. I'm always watching what's happening, okay, so that's another way how I trade. I'm always, I get an alert or something, and then I come to my trading station or I look on my mobile to see where it's at. So if I see it, like I'm just talking hypothetical, if it's a big red 4-hour candle that comes back down here, catches a wick, and then reverses back up and kind of closes near the high up there, and then a small pullback, that might be the area to buy. Like that might be where I got to initiate my buy, because then maybe I see the structure, I see the red candle come down, but then I see the big rejection and it closing near the high, small pullback. That might be the time to enter that trade anywhere again above that white line, and then I just got to determine where I'm placing my stop loss. More 100% I will be below this area, 50% of this green candle, depending on what happens before it gets up there. I don't know. Maybe this candle will come down red and close below there, and then I'm not even looking at the buy. Then I'm looking at the sell coming below here. Okay, so I take it candle by candle. Even if it's on the 4-hour, I gotta wait for this 4-hour. It's 2 hours and 52 minutes. It's not gonna close till 2 a.m. This candle right here. Okay, so the way how I'm going to set it up is I'm going to place an alert up here to give me an alert if US30 gets up to that white line to determine up there. I'm also going to place an alert down here at this white line to give me an alert if US30 crosses down in here, because this could be, now look at, like, just look at the legs. See how it came up one leg, next leg came right back down. Now we're starting the third leg. It's coming right back up, but it might come up to like a physical double top is right up there. It might be a lower high double top right here. And then they're going to push it back down, maybe attempt to come back down in the green box, comes down, closes. Look for a pullback in the green box, buyers, then they get absorbed, and then there's the physical drop, okay? So that could happen. Now, where do I want to initiate the sell on this potential move? Do I want to initiate it when it's kind of breaking below that white box? Or, again, do I want to be maybe below that wick right in there? Okay, so I'm a little bit more aggressive. I like to take trades. Even if it's a 4-hour setup, I still go to the 1 hour and then I watch the 1 hour candles. So see the 1 hours, there's no volume in the market. This is 4 o'clock, 5, sorry, we got 1400 is 4 o'clock. There's 6, 7, 8 p.m. right there. That's the futures market. 9 p.m., 10 o'clock, 11. There's very, very thin volume right now, okay? So, but if I do get an hourly candle close below there, that's where I could maybe initiate my sell. If it comes down right there, closes below, retest, I could start my sell, and then I'm looking for it to come down. If I'm just looking for it to come right down there, again, if that's all I'm looking for, I measure this, so I know exactly. That's 100 pips. that's not bad. That's someone's daily goal. But if I'm in a 4-hour setup, I want more than 100. It's not getting greedy, but it's allowing the higher time frames to play out. Then maybe it will come down. It will test those bodies. That's 180 pips. Maybe test below those wicks, 250. Then we get maybe it pulls back up, but then it gets absorbed on that higher time frame 4-hour candle coming down, and then all of a sudden it's dropping, and we're up 350, 400 pips down there. Okay, so I'm gonna look to initiate even a buy up there. So even if the 4-hour candle comes up there, we were talking about that. If it trades right up to there, to the second top, again, I measure it because I might be in a buy, and all of a sudden it's coming up to test the previous right there. All those three high wicks, that's 150 pips. Then that's where maybe I'll go to a break even and let the trade play out. Maybe it might come up 150 pips, get right up to there, pull back a little bit, maybe hold 50%. I'm still up maybe 75, 80, 100 pips, and then maybe it gets more momentum and it drives through here. Then all of a sudden it turns into 200, 250, 300 pip trade. Okay, so for Dow, I'm going to go back to the 4 hours. I'm going to clean up the chart, but I'm going to look above and below this consolidated zone. Okay, I know it's a little bit more aggressive, but if it's too aggressive for you, then you continue to watch maybe the bigger zones at this red box or the green box. Okay, I'm just going to be physically watching in here for myself. Okay, so like how I played it out on the hourly, but on the 4 hour, this is what I'm looking for. Looking for some good volume to close above here. Again, how I played it out, to come back up to that high, maybe physically make a new high, and then to trade into our old consolidated box up there. Okay, where will I place a stop loss? 100% I'll be below this structure, but it all depends. If it comes down, picks up liquidity, I might be below a liquidity wick, depending if it's building. But that's where I'm going to look to place a stop right there. Okay, but also the sell side. How I was saying, if it closes below there, then I'm not in a buy. I'll be looking for the sell, and then I'm looking for the sell to break that wick and trade down into this area. See all those wicks there? That kind of structure right there. 38,000 exactly. Then I look for the sell below here. And I look to take out the low with volume close below the green box so that I can flip the green box red. And then if it comes back up green, 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 then hopefully a higher time frame daily 4 hour will start to absorb those buyers and then continue to push it down. And then we're looking to take out this low and create a new 4 hour low in the market, possibly trade into 50% of that green box. Okay, and so you can see like kind of my stop losses are kind of like this consolidated area, depending what happens up here but I also look for clues too. Okay, that's why it's hard to do this when on a 4 hour candle. That's why I like scalping 5 minutes, because 5 minutes I can explain things that happen fast in the market and you guys will understand exactly what I'm saying. If there's a 5-minute candle that comes down there, breaks, catches a wick, comes back up and closes right there, that completely changes my mindset of a sell. If I see it's a liquidity grab and closing above, then I get rid of my sell and I'm looking for the buy. Okay, but 4 hours, these things take a long time to develop. We're right here, and there's still 2 hours and 45 minutes to go. Okay, so we'll continue to review this tomorrow, but that's what I'm watching for. So I will provide this chart for you guys in the chat. 1 second. So you guys got the gold chart in there. Let's give you the Dow chart. Okay, Zoom chat. If you guys can just look in the chat area, you'll see another trading view link. That's our US30. Okay, so does that make sense, everyone? Makes sense what we're looking for this week? Right now we're consolidating, but it came up, back down. It could physically come back up. It is creating a higher low. It's going to be interesting. It's going to be very interesting to say the least this week. Still early, but we'll see what we get. So let's leave right over here. We'll leave Dow in the middle. gold is coming right back down. We're probably going to get an alert down here. Gold has 1 hour and 45 minutes. It's coming again near the low. So I'm going to watch this 4-hour candle close on gold. It might break down, might give me that physical close. Then I determine where's 50% of that red candle, maybe for a pullback. Maybe it's just a quick little retest and a drop. Then maybe I'm going to start to look to initiate maybe a possible sell. Or I wait for more London, going to London or New York. Okay, but we've got gold done, US30 done as well. Let me just place these arrows just to show you guys what I'm looking for. And also, if you're even scalping the markets on the 15 or the lower time frames, fives, you can still follow the 4-hour. Have in the corner of your monitor, like have the 4-hour time frame, because you can play the 4-hour volume. Like if you start to see exactly, you see a liquidity grab on a 4-hour candle, it's a big FU candle coming down, low wick break, you might be looking to scalp that, but you're playing the 4-hour candle, you're playing that 4-hour momentum, so you can think to stay in sells or continue to sell. Don't buy those little pullbacks because this 4-hour volume is coming down hard. So I really advise that you guys follow higher time frames. Whether you guys are scalping 1 minute or 5 minutes, it still helps. It still helps. You want to be with the higher time frames, and not counter trade against it unless you know what you're doing, unless you understand the concept of pipping and dipping and getting in and out. Okay. Let's finish up NASDAQ now. Okay, so NASDAQ is a completely different index. This is more tech related, not all tech, but 50-60% of NASDAQ is weighted heavy on tech. This security is completely different than Dow Jones. Number one, it's weighted differently. Okay, so that's why a lot of traders don't like to trade Dow Jones, the way how it's weighted. They call it like a outdated security because Dow Jones is weighted old school style from back in the day. It's the price tag of the security. Okay, so for example, if Costco is trading $800 a share and Apple is trading $200 a share, okay, they don't look at the market cap of the actual security, they look at the price tag. So they give Costco a little bit more weight. It's ranked higher because it's worth $800 a share and Apple is only $200 a share. Okay, so that's how Dow Jones operates. You got to know how it's weighted, and a lot of traders don't like that. Okay, I can't change that. That's how Dow Jones is. I just like how Dow Jones moves, and the securities that I'm actually interested in, more of them trade in Dow Jones. Okay, but if you're trading S&P 500, if you're trading NASDAQ, these are market cap weighted. So Apple has a higher market cap. When you multiply the $200 per share and the shares outstanding, Apple has a $2 trillion market cap. Costco might have 800 billion market cap. Okay, but then I'm just throwing numbers out of thin air. But I'm trying to show you guys that Apple, when it's weighted in NASDAQ or S&P, they go by the market cap. So then it's got more true weight for the actual weighted security you're looking at, not as opposed to just a skewed sale price. Okay. So hopefully I'm going to make webinars and get you guys more informed on that. We're going to talk more in detail about it. But did you guys know that? Okay, so that's why some traders or investors prefer to trade NASDAQ, S&P over Dow Jones, is simply because the way how it's weighted, or the way how it's skewed. Okay, but it's good to know. It's good to know. It's more information for you. Some traders do really well trading NASDAQ, S&P, and Dow Jones, and they have no idea the way how it's weighted, nor do they care how it's weighted. So there is those traders too that are doing really well, and I have a conversation and ask them, "You're doing amazing trading this the last couple months. Why do you choose NASDAQ? It's the way how it's weighted. Do you like?" And they say, "Ron, I have no clue how it's weighted. I didn't even pay attention to that." So it just whether you want to know that or not, but it's there. And it does affect traders. What they choose to trade is for those things. Okay, so let's take a look quickly. And then we'll wrap up this call. We did start a little late today due to the audio. I'm just happy that the mics are working and we're good to go. But looking at this chart of NASDAQ on the daily, okay? So just some quick areas that our eyes can look at. Here was red area of resistance, turned into support, right there. Bring it across, make it green. Very simple. Now I get one area. If it ever does come back down there, maybe this area, 17,000, will be an area of demand. We're nowhere near this, okay? So then what we got to do is look for other critical areas of zones. And I can see one right here where that created a green zone. It turned into a red zone. Red bar candle closed below. Flip your green box red. There it came in, rejected, right in, rejected. Now bring this box across again, still with the red theme, but now closing green above it. Bring this box across. See that big green candle right there on Friday, May the 3rd, close above. Therefore, this zone is green going into the future. Another zone right up here. Okay, you can clearly see all of those rejection wicks up there. This is your area of resistance. Okay, I think we did this last week. I was saying why I didn't do that previous all-time high wick. I could have done it like that. It's kind of over exaggerating. I kind of want to get more touches. I get a touch right there, a touch right there, a touch there, touch there, touch there, and a touch there. Make it red, okay, and just simply go through the motion. It's red, resistance. I don't see one green candle close above here. Therefore, that was an impulse fake out, sweep the high, and then there was the push down. Bring this zone across. Now I get my first green candle close above, Wednesday, May 15. If a candle closes above green and I have a red box down here, I'm missing something. I need to make my box green. And if it's sitting right here, I'm missing something. I didn't bring it into the future. Now I did. Now I really want to bring it into the future. So you guys can't say to me, Ron, you're just looking at some shit on the left and you're not really predicting anything in the future. Well, that's why I'm going to say, now I'm ready. If NASDAQ comes back down into the green box, Ron will be ready here. And if I see it reject out of there, I might look for a possible buy. Then I'm going to tell you guys, hey, remember the call on Monday night when we were doing our top-down analysis on the higher time frames and we figured out a zone and we stretched it into the future? We'll have that conversation. Some of you guys are going to say, Ron, I missed it. Some of you guys are going to say, Ron, I caught it. And that's how we'll learn together, okay? But now, do we see any resistance above there? I can, clearly. I don't even need to draw a red box up there. Like, my eyes are just naturally trained to look at these things. That's why, for me, charting is very, very simple. It's very routine. It gets really boring, to tell you the truth, because it's the same shit over and over and over and over and over and over and over. You know when your job at work gets so repetitive and gets so boring that you can do it with one eye open, and it just becomes part of your daily routine? Okay, that's kind of, if trading gets really boring, you know you're doing something good. You know then it's kind of automatic. I'm not going to say that this is like really boring to me. I'm still passionate at what I do, but I'm saying that just locating zones, it's becoming like, it's just, I know what I'm looking for, and that's what I kind of want to get you guys to know exactly what you're looking for. So did those zones, like, did you guys have any difficulty with any of those zones? Or do you guys have any questions with any of those zones? Or do they line up properly with where you guys would have placed the zone? Let's talk right now, okay? Because we're going to keep this Asian sessions for education as well. Did anybody have any complications with anything that we just did there? Box 1, box 2, box 3, box 4. Is it pretty straightforward? Did I explain it correctly? You guys know what I mean? Anybody on this call? Anybody? Nobody? Can you guys hear me? Is the audio out again? Okay. Not much interaction here. Bear season, Kenny? Okay, we go bear season. Okay, if it's bear season, then we see that they took out the low there, came down, but then look, liquidity got swept right back up and it retested the green box, Kenny, and we're moving, we're consolidating in here. Okay, so I'm just gonna now start to really dissect what's going on in here. Okay, so we are currently consolidating in here. Our all-time high is right up there, right there, that wick, all-time high, Thursday, May 23. A lot of that had to do with Nvidia. Remember, Nvidia had earnings, drove the market up to all-time highs, 18,950, almost 19K, but we didn't get it. Now, on the daily, let's just get some, I don't have any yellow lines on my chart here, so I like to look for some yellow daily pivot areas or areas of interest. Okay, so I'm going to place a yellow line right here on my chart. Okay, the reason why I'm placing it right here is our most recent area of structure, 18,500, this area, where it came down red, kind of closed right there. It hit the low, closed. Then this candle opened green, came right into 50% of that daily candle, got rejected. They took out the low, low wick. There's that huge bearish candle, drop all the way there on Friday. And then look at where it stopped, like right there. Look at the pivots. Anyone have, like, would you have placed the yellow line right here? Not looking at the wick, but looking right here. You got a body. See the red candle that kind of open, close, half of it somewhere right around here. But now that this is why I like to look at the left of the chart, because when I look to the left of the chart, I can actually see it come up green, green, green and get rejected right there and push down. Then I can see how it reacted in the past. So if I was kind of ready for that, maybe it could have caught it coming down red, red, red right into there. And then that's where the physical bounce was. And it bounced all the way where it still closed red right there at our yellow line. We opened Monday, today, right there. It came down red, red, red right into our green box, created a higher low off that rejection on Friday. Came back up to where we opened, created a new high, but couldn't take out Thursday's high. So that's kind of maybe where I'm going to draw a new yellow line right up there. So I know kind of like my weekly high area. And we sold off, and NASDAQ now is red right down in here. Are we going to come back down red, red, red to the yellow line? Maybe consolidate in here. Are we going to come into red? 50% of this green candle right in there, 18,575, and catch a wick and go back up and try and fill this wick and then break out to, guess where? Our all-time high. Or are they now creating all-time high structure where they've got the all-time high supply, they've lowered it right there, kind of absorbed it on yesterday, brought it right back down. Are we going to come back down? And I'm going to look for, maybe if we come back down red, 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 I'm looking for a 4-hour candle to kind of close down in here so that if it continues to push down bearish, we might fill this wick and continue to drop. And then I make this green zone red. However, if we do come back up, maybe green, if it comes up, maybe we close above there and retest this, then is that enough to take the buy back to all-time high and maybe we do get an all-time high breakout? It might be worthwhile looking at. If we look at the all-time high move, what was created, we do have this big bullish move, this one that created the all-time high. We kind of traded, kind of retraced all the way back down, but good liquidity grab down there. Volume closing right here, we got structure. Are they going to build it back up to try for that all-time high? Again, it's an M top, double top. Will it be drive to 19,000, new all-time high, then a huge sell position comes in and really takes it down? This is the start of our neckline right here. This yellow line right here, that's the start of our could be our daily neckline. Then if it comes back down, I'm going to use that same yellow line as reference to get into that big short position right there on NASDAQ. But let's take a look on the 4 hours, how it's trading. So right now, what we can see on the daily is we sold off last Wednesday, Thursday, really flushed it on Friday, but it came down there, picked up a big wick. So maybe the shorts covered their position down there, allowed new bullish volume buyers to come into the market, and then it retested this green box, still holding, came back, closed with green volume yesterday. So maybe are we going to consolidate in this daily range right here? And then on my 4 hours, maybe I don't want to trade in this kind of tight range. I want to watch what will happen up here and more specifically what will happen down here and maybe drop. So when I go to the 4 hours, now I see exactly which 4-hour candles dropped the market, which 4-hour candle when and where, what day exactly picked up the market. So I see the big drop was Friday, 9 a.m. What is that? 9, 10, 11, noon. That's Friday Wall Street. Big 4-hour candle sold the market down, and then it came back up when? 1 p.m. Eastern, 1, 2 p.m., power hour, 3 p.m., 4 p.m. after hours close, and it came up all the way back up bullish, and then Sunday continued with that bullish momentum right here. Monday, 9 a.m., Wall Street, they kind of came back up here, but you see it's a lower high from over here, lower high, still pushing down the market. So that big bearish candle that came down, it rotated right back up. Again, no green volume closing above there on the 4 hours. Pushed it down, new low, came back up, lower high, they flushed it. They came back up green. It tempted right there this morning, tapped up there, 18,700. Again, no green 4-hour volume closing above there. So big 4-hour candle came down. That was kind of the glitch that I was talking about. Berkshire Hathaway, the drop down there. Then the markets kind of halted, started right back up again. Then it was kind of maybe a glitch, and then kind of bought it right back up. Now we're trading in here. So I see higher low being built, overall higher time frame, higher low in there. If it continues to come down red and we hold above 50% of this green candle, maybe reject back up and it's coming, we might be driving for an all-time high, a new all-time high this week, with NFP and everything happening in the markets. So again, like how I had Dow, maybe I'm going to trade it to see if we attempt an all-time high. How many pips is this if it comes right up to our actual all-time high and I'm maybe in a buy? It could be possibly 250 pips. If you get that new breakout above 19,000, that could turn into a 3, 4, 500 pip trade. Okay, if we do get that solid breakout. But what I need to see is a 4-hour candle close with some good positive green volume. I see there it got faked out. There it got faked out. You still have this big bearish bar right there pushing the market down. So we need to see a clean 4-hour candle close with some good green volume up there. Maybe pull back either into this area and then find all that depth of market and continue to trade back up here. If that's too risky of a trade to take, because some of you guys might be maybe like worried about this all-time high double top, like coming up here and then going back down. Okay, that's why if it goes up 100, 150, 200, 250 pips, you go to a break even with a trailing stop. And then but if we do get that breakout and it retests this, and this can turn into a new green all-time high demand, you never know. Like maybe it's got still some room to move to 19,000 plus. Okay, remember this is price discovery up here. This is NASDAQ has never ever in the history been up here. Okay, and like Nvidia was up what 3.54% today. It's still like trading at all-time highs. Still hasn't even cooled down the market. So maybe it's just going to trade sideways a couple days until we get more into Thursday and Friday NFP, and we'll see. So I'm going to continue to watch for 4-hour volume to close above there. I'll place some alerts up here. Again, I can flip to 1-hour candle to watch maybe a 1-hour candle close above there, but I will be physically looking to see maybe if we can take out the all-time high and move up to 19,000, let's say 100 up there. Okay, that's a potential buy opportunity if I do get that. But however, if I see that the market did come up, lower high, big red candle, push it down, got a big green bullish candle come right back up. Now it's coming down red. I like to see what will happen if the sellers can attempt to close it red below 50% of this green candle. So again, I want to see red volume come down, attempt to close below there, retest it, and then now we're trading below 50% of that green candle, maybe a pullback, and then sellers absorb, take out that low, maybe close it below there. Then there's obviously going to be some demand here, buyers below this green box, and then come back up. We flip that green box red, and the market, maybe NASDAQ, is really selling off, take out that daily low, and then start to drop down into here. Okay, and then we got a lot of room to drop. My next white line like on the 4 hour, will be right here. You can see the structure, how it was built on those 4 hour candles, right in here. Just make it a white line, yellow, whatever you guys want to do. Yellow, white, it's up to you. Okay, I'm just showing you on the 4 hours that it was structure right there, held structure right there, then it started making higher lows and started that big bullish move. We could be ray tracing all the way back down to test that area. Okay, so I'm gonna look for potential sells to maybe continue with the all-time high sell. Here it sold, pull back, lower high, new lower low, pull back, lower high, new lower low, pull back, lower high. They really kind of pushed it down. Then it came all the way right back up. We didn't get any green volume close above there. That's why I'm looking for buys above there. If green volume closes above, if it can continue to make its way up there. But there was that big rejection, came up green again, and we might be coming back down red. So I'm looking for some physical volume to close down there and maybe continue to sell down this week. So I'm going to look for sells on NASDAQ below here. I know it might be kind of aggressive, but again, if it's too aggressive for you, then what you guys should be looking for is maybe sells below the green box. Okay, you just, or below that wick. I'm gonna maybe initiate like some, maybe a smaller feeler trade in there, and then if it's starting to go down in my direction, I will add a another position to go down with it. But that's what I'll be watching for US30, NASDAQ, and gold this week on the 4 hours. I will give you guys this chart in one moment. Okay, there's a third chart in the Zoom chat. So we got three charts, trading view. There should be a gold, a US30, and a NASDAQ for you guys. Okay, so let's just put these three together. Okay, and gold is approaching our area down here, but there's still an hour and 23 minutes. So what I was saying is, if you want to watch it on an hourly close, you see how that 4 hour candle is coming down to that critical area? If you want to focus on the 1 hour, see this 1 hour candle now? See how it's coming down red, it's coming down, testing that low right in there. There's 23 minutes left on it, on that hourly candle. So maybe I watch to see if that hourly candle will physically close below there. Maybe the next hourly candle will come up green, they reject it. Maybe it's closing below there, there's a nice rejection. I might look to take my sell, and then I flip to the 4 hour. I'm in the sell, but I'm playing the 4 hour volume. And then I just adjust my stop loss with the 4 hour structure. So therefore I got to use a smaller lot size, because I'm going to be having a larger stop loss, because I'm not scalping it for 5-10 minutes. I'll be in this trade for maybe a few 4 hour candles, maybe half a day, maybe a couple day hold, but try and look for the bigger move. Okay, so that's what we got developing on gold. Okay, guys, it's almost midnight. It's almost 11:40 p.m. Eastern. That's it for me tonight. We'll be back tomorrow, same time, 9 p.m. Eastern. Hopefully tomorrow we don't have any audio issues and we can get right into it. I apologize for the start of the call. I had a power outage for 2 days over here where I am. It was first day on the weekend. It sucked. Saturday morning I had no power for about 8 hours, and then Sunday morning I had no power. It was off for a good 12 hours. Nowhere in the neighborhood had power on the weekend. It sucks, but I got it back up and running. I had to reset up everything, and then it affected my audio and all of that. But it's all good now. So everyone, get some rest. If you're going to trade London, be careful in London. New York tomorrow too. We went over all of the news. We went over all of the earnings this week. Friday is the big day, NFP, non-farm payroll, and specifically next week, Wednesday, is FOMC. So whether you're trading or you're not, or you're maybe just watching what's going on in the markets, pay attention to those days. Like even if you're not trading on Friday, pay attention to how your securities trade with NFP, see how maybe they close the week, and then how we're moving into FOMC midweek Wednesday with Powell and the federal funds rate. Maybe Bank of Canada will give us a little bit of a clue as to what they're going to do with the rates this week. They're already forecasting a quarter basis point decrease in the rates. We'll see if they actually do that. And then we'll see what happens in the US. Okay, so this is just early analysis, the start of the week. I like to do this sometimes on Sunday nights, but I get with you guys on Mondays, so we do this Monday night. It worked out really well for us last week. A lot of the 4-hour setups played out for some of the securities. Remember, I gave you guys two directions. I can give you guys my bias on one direction, but I want you guys just to get used to looking at two type of setups, and then we determine how the volume is moving when it gets up here, and then maybe to take the buy or the sell. Remember, guys, you might switch. Like I might be looking for a potential buy on NASDAQ up here, but as it's coming up, maybe the 4-hour candle gets rejected, and it maybe closes below there, and then starts to push down. And then I start to see, okay, I was looking for the buy, but it was a fake out. I could even, I'm looking for a sell down there, but if this pattern plays out, I could be looking to sell right there now. Now I'm trading in the consolidated box, but I'm playing the fake out, I'm playing the retest right there, and I'm in the sell right there. Okay, so this is just looking for this area, but if it starts moving up here, just like if I'm scalping the market, if it's a 5 minutes coming up here, it gets rejected, closes below here, retest this. Sometimes when I'm scalping, I start to move my sell order right there. So I can still do that with the 4 hours, but this is more the bigger critical point of interest we're going to watch for the bigger moves this week, okay? So just play it out, whether you're trading it or not. Watch what happens at these areas. See how gold just came down there and then caught a wick and bouncing right back up. If you want to watch it right on the 60 minutes, you can see exactly how it just kind of came down there, caught a wick, and now it could be coming right back up. We'll see how it will close. If you really want to get into the markets, like on the 5 minutes, then this is what you're watching. These are our same 4-hour zones, but you see how it came red, 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 all the way down to our daily level, kind of bounced up, might come back down. But you see right here, that would have been a beautiful 5-minute scalp. I know it's hypothetical, but how many of you guys maybe saw all that shitty candles and boxed that range in? Okay, so yes, it did make a move to the high, but then got rejected, 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 pushed down, came back up there green, they rejected it. There's kind of your clue candle, your big rejection. There's another clue candle, came up there, closed below, could have initiated a short. But you see the red bar, how it closed right below here at 21.05. I know, guys, we didn't do this live, but normally if I see that, a body close below, you guys know I judge whether it will come up 50% of that candle. It's an ignited bar right away, low wick. If I sold, next thing is, where's my stop loss on the 5 minutes? Is it really, really going to be tight, 50%? Maybe I want to be above that, or maybe just above all of that structure. I'm above that big rejection wick. I'm above this previous structure. How many pips am I risking if I did take that? Measure it so you know. If it's all the way up there, you're risking 30 pips, 30. But then what could be your potential reward? Just coming right down to there, to that previous low right here. Those two tweezer bottom lows. That could be where your reward is waiting. There or maybe a little bit below. But I normally kind of trade like a robot to the next low. If I was risking 30 pips, just to come down there, maybe to make 50. So it's you risk 30 to make 50. If you played it all the way down there, yeah, you maybe got 60. But if you didn't do anything, it got a rejection wick, and came all the way right back in to where you were. I'm just hypothetically saying where you could have entered, and that's where your break even is. And you see how the market came right back up, maybe tag the break evens. and then continue pushing down. It came back up lower high. Now it tried to come back down there, coming back up. Maybe they will flush it and break it below there. And if it does, look at your 5-minute bodies right there. You know how we did this with the 4-hour candles, where we looked at the 4-hour structure? There's my red line on the 5 minutes right there. If it does, see all that consolidated area? If it does break the purple low, it might just come right down there, 23.41, and that's it. Find some support and come right back up. It found a lot of support right here. Why would it not find it coming up soon? Okay, but if the market now closes below there, this area of support, this red line might turn to short-term resistance. It might come back up green, retest this, get a wick, and continue pushing down and take out this daily low. But you guys see how sometimes you got to wait through all this shitty stuff to allow the trade to play out. So it was consolidating. They took out the high, brought it right back in. One more time, they trapped all those buyers, trapped liquidity up there. They flushed it. They finished the move with a red bar closing below. And then your next thing is your ignited, your retest. And if you grab the sell right here, you could have grabbed yourself 10, 20, 30, 40, 50 pips. Could have been done for a quick little Asian session, okay? But we're watching the bigger moves on the 4 hours, okay? That's why personally I love scalping, okay? Because everything that I taught you guys, or what we just talked about on the 4 hours, I do the same thing, but on the 5 minutes. Because sometimes I don't have the patience to wait for 4-hour candles to close above here, close below there, because it might take half a day. That's why I have to make sure that I have the swing mindset when I'm trading 4-hour candles. That's why I can't just get into a 4-hour candle and turn it into a 20, 30 pip scalp, because that's not what I'm trading here. I'm trading specifically daily 4-hour candles to hold these things to grab 200, 300, 400, 500 pips. If it starts going up in my direction, then my next thing is to reduce my stop loss, bring it to a break even as much as I can, hopefully start to take some profit along the way and reduce my risk. Okay, but guys, I hope you guys enjoyed tonight's call. There's not a lot of people we get on these late night Asian sessions, so I appreciate every one of you guys that joins us, whether you're in our Zoom and YouTube. I do appreciate all of you guys. I hope you guys enjoy what we do here, and have fun this week in the markets. First week of June, first month of June, new month, okay? Lots going on. We got NFP Friday, FOMC next week. Lots going on in the markets. We'll see how everything is moving, okay? And there's a lot going on everywhere you look. Everywhere, every country, everywhere you look, there's a lot going on all around the world. So just play it safe. June, July, and August are known to be not the greatest months to be trading in the markets, in the financial markets. Things pick up again in September. So I like to use June, July, and August for a lot of education, to prepare us for what's to come in September, October, November, and that Santa Claus rally. So if you find that kind of volume dries up mid-June, early July, or August, don't feel like that's how markets move. They're very seasonality. They're very, they have these patterns that's how the markets trade. There's thinner volume in the summer months. Think about it, okay? It's summertime. A lot of bankers, hedge funds, institutions, they take breaks. They take summer holidays. They come out of the markets. They allow the markets to consolidate over the summer, and then they come back in right after Labor Day weekend come September. So that's how markets are very cyclical and seasonal. So that's how they move. But there's still trades to be made. There's still opportunities. But if you see that there's a lot of ranging going on, don't get frustrated. Don't get pissed off with the markets. Remember that that's how these things tend to move in the summer months. So if you're learning, continue learning. Like, don't go all in with all your live money and learn in the worst times, because July and August might be the worst times to learn. You're gonna lose your money, and then you're gonna have nothing to trade for. And then come September, October, some of the best months to trade, and then you've lost your mindset, you've lost your bankroll, you're upset, you've learned all bad habits, when now you should be applying what you learned and putting it into the markets with good volume, okay? So that's all I'm trying to get at. Maybe this year might be the first summer that it trades absolutely phenomenal, and then everything that Ron just said, throw it out the window. So again, we take it day by day, we take it candle by candle, we observe, we see. If there's opportunities, we take them. If there's no opportunities, we sit back and we're patient and we're disciplined, okay? All time frames, all months, all throughout the year, whatever, okay? But thanks, guys. If not, I'm going to talk to you guys all night, and Ron's got to get some sleep, as do you guys too. So everyone get some good night's sleep tonight. Don't let the bed bugs bite. And we'll see you guys tomorrow night. Hopefully we got a little bit of moves on these three charts. We can recap, we'll analyze, and we'll go through tomorrow's market news. Okay, have a good night, everyone. I appreciate all of you guys. Thank you, guys. Join the team, stocksnipertrading.com. If you haven't joined us, this is our free Telegram channel. It's linked at the top. I posted it for you guys at the top of the YouTube. But if you do want to join us, right over here, stocksnipertrading.com. We'd love to have you guys on the team. You get all of our live education, all of our content, our courses, webinars, boot camps, our live webinars we do on weekly webinars, our SST signals, the private Discord channel, and all of our other live sessions that we do in London and Wall Street. Okay, but guys, thanks a lot. Have a good night, everyone. I appreciate all of you guys. God bless, and we'll see you guys tomorrow. Have a good night. Stay safe. We'll see you guys. Thank you, Franco, for joining. I appreciate your time. Have a good night, brother. Thank you, guys. Heartily, take care. Danica, take care. Sally, have a good night. Tanya, take care. And everyone on Zoom, YouTube guys, I appreciate you guys as well. Have a good night, guys.
Welcome to Stock Sniper Trading. Ready to transform your trading? Discover the perfect Stock Sniper trading plan for you. At Stock Sniper Trading, we execute trades in real time on live sessions with proven strategies. Let's take you through our membership plans. Live trading and Scalper Pro signals. Our monthly plan starts from $49.99 USD plus tax. Our 3-month plan starts from $149.99 USD plus tax. Our yearly plan starts from $549.99 USD plus tax. Our lifetime plan starts from $999.99 USD plus tax. Stock Sniper Trading signals. SST monthly signals at $29.99 USD plus tax. SST 3-month signals at $89.99 USD plus tax. SST yearly signals at $249.99 USD plus tax. For more details on our one-on-one trading and consulting and subscription plans, kindly visit stocksnipertrading.com.